You know, if you lose a trade in space, it doesn't count because nobody can hear your screams.
Good thing I don't lose.
Frank. We're not lost, are we?
According to the spinning thing in front of me, I have no idea.
What was that?
Sorry, I just got an EDGEFINDER alert on my Discord.
Wow, nice add-on.
I think my helmet's too tight, or maybe my head is just too big.
Oh, it looks like we've got an incoming transmission.
Remember guys, we're doing our big Black Friday sale this month. Check out the links in our bio for more information.
Roger that, Julie.
Okay, I'm starting to think we might be lost.
Maybe James could help us with directions.
I think he accidentally blasted himself out of the airlock.
Again?
Let's go get him. Man, I've been playing too much Starfield. This feels kind of real.
Maybe we should do one more lap.
I think that's a good idea.
You know, if you lose a trade in space, it doesn't count because nobody can hear your screams.
Good thing I don't lose.
Frank. We're not lost, are we?
According to the spinning thing in front of me, I have no idea. I really don't understand why we're looking for this planet.
Frank, it's because someone told us that there's this planet out there where traders can get funded up to $200,000 in simulated trading accounts. And if you pass, you get the chance to get all your money back. It's really kind of a trader's paradise.
Traders have been searching the stars for a place like this, and it's just too good to be true.
Frank, you just gotta believe. Once you get there, they'll give you 15% off any examination with promo code A1Trading15.
Yeah, I'll believe it when I see it.
All right, Frank, take us out of hyperspace.
Coming out of hyperspace. Now. That's FX2.
That's it. That's FX2. The legends are true. It is as good as they say.
Wow, this is incredible. There's a big giant sign that's got a promo code at the front that says A1 Trading 15 for 15% off.
We finally made it to FX2. Get your discounted access to their trading accounts right now. Link and promo code down below in the description and in the chat right now.
Can you repeat all of that once again?
No.
All right, everybody, welcome back to another stream, second stream of the day. We are here for, of course, the big news that is coming out here in just about, well, I guess it's a good ways away. Hold on, let me make sure I get this correct. We've got Jerome Powell speaking at 2 p.m. So that's about an hour and 45 minutes away. And to get us there, we're going to be doing some technical analysis, some fundamental analysis. We're going to be taking a look at some setups before, during, and after all of this gets going. I should say also we have Lagarde speaking in 15 minutes, which I know this is considered a orange folder here on Forex Factory, but this actually does have the potential to be red folder. Similar to Jerome Powell's importance, Lagarde is the European Central Bank chair. Is it the chair? I don't know if it's, they call it president. So Lagarde is speaking in 15 minutes. You also, of course, have Jerome Powell in about an hour and a half. And both of those will be likely some volatile news events. So to go through this, as we did earlier, we are going to take a look at several charts, technical trading setups, all the good stuff that we do on the show each day. I want to invite you as we kick off. There's about 100 of you guys joining me. I'm sure we will get a little bit more people in here as we get started with the big event. If you guys could just do me a quick favor, hit that thumbs up button. If you were here earlier, definitely say hello again. I see Jamie's in the chat. Thank you, Jamie, for that, for hanging out with us a second time. 2 in a single day is a lot, but we are going to be jumping into some technical trade setups. So let's talk about the dollar here first. So in terms of dollar technical analysis, let's start with the daily chart. In fact, let's take a look at the weekly really quick. So the weekly chart, huge uptrend. Obviously, this was the era of hikes, right? We just had so many rate hikes, some record-breaking amount of rate hikes in a very, very quick succession. And then there was some rapid decline in the inflation department, which the market was happy to see. So 2022 was really tough. 2023 so far has been, in some ways, kind of a relief on the inflation story, but then things started to pick back up and freak out a little bit. Well, where are we currently? Well, I think it may be swinging back into another period of downwardness, if that is a respectable term. The reason I say that is that you have overall the inflation story. Now, why did this tick back up? Anybody know? Feel free to chime in if you know why the dollar started to go back up again. One of the big reasons is that inflation came down rapidly from like 9%, but the inflation from like 9 to like down to like 4% was pretty easy, right? So that's a big drop. So people were like optimistic that, hey, inflation, we've got it beat. It's going to go back to 2. But then we fizzled out and we haven't really made incredible progress. We get CPI next week, which will be impactful for sure to the markets. We'll be streaming that, of course. But we fizzled out. We slowed down on that. And so people started to be fearful about further rate hikes to get inflation to go down lower. And that, of course, spiked the dollar. There's the story of the dollar, the last few years of dollar bullishness and bearishness and all that in just a summarized, really oversimplified format. Fast forward to today, fundamentalists and technical traders, we can observe what's been going on. On the fundamental side, you've got Jerome Powell last week, which sounded less hawkish. Okay. Now, what does hawkish and dovish mean? Hawkish means rate hikes and monetary policy tightening to slow down the economy in an effort to get rid of inflation. Not crash the economy, that's not the goal, just to slow it down, cool it off a little bit so that inflation prices will stop going up, right? Or at least as fast as they have been. So we got a little less hawkish sounding Jerome Powell. So when I say that today's stream is very important, it's because we are checking now to see if Jerome Powell is going to confirm the narrative of that less hawkish sound that he piped up on last week. Finally, the nail in the coffin for the Bears last week, or I guess in the Bulls case, because they got beat up last week, NFP. Think about the story. I say this very often, guys. Fundamentals are really important because they tell you the story of the market. Well, NFP came out and showed a huge slowdown in the jobs department. So sure enough, dollar dropped off a cliff because, again, slowdown in jobs means less inflation. It means cooling economy, right? That's what the Fed wants. Cool. We're starting to see it. That edge of rate hikes to oblivion goes out of the window. Now, as we retest that area, all of that stuff to be said, I think right now the trend is still lower. I've said that. I said that earlier, and we will see if I'm correct about that. So as I approach this afternoon full of content with my guests and my own commentary, I'm sure Frank will join us. We've got Gary coming on. We've got a list of people that are going to tackle this market. So buckle up, stick around with us. I just want to say, if you guys are just tuning in now, hit the thumbs up button as you start out the stream. It would mean a lot to us as we kick this off. Hit that thumbs up button. We'll be here for the next few hours to give you guys the best coverage we can. And I'm sharing, of course, trades and things that I'm looking at, as well as our guests who will ask the same questions too. So real traders are going to be on here. If you want to stick around with us, we invite you to get comfortable and stick around with us throughout the whole stream. Okay, so in terms of where we're at with the dollar, I've made this point many times. We're at a level of resistance that I think should hold. Guaranteed to hold? No such thing, right? But probabilities wise, I like the idea of a hold here for the sellers to push this thing back down to that 104.5 level. Okay. So when I take that with me, we then go around the room and we look for setups. So we're mildly dollar bearish. I'll take a look at the euro. The euro so far looking pretty good. This idea that we talked about on stream yesterday seems to be playing out really nice so far. So for the euro dollar bulls, what I pointed out was that you had this really impressive breakout, right? Big pop to the upside. Price pulled back now. Double bottomed here on the lower time frames and has now found support. Path of least resistance, in my opinion, euro should go back to retest these highs. And then the question from there is, does it want to continue further beyond that? So I'm saying it now. Trade setup for me is I don't have this trade on. This is not a trade I have live. Let me be transparent. I don't have this trade on. I wish I did. But it is a trade that we discussed on stream yesterday, and we talked about how this looks really good. I just didn't pull the trigger because I had some extra things I was looking for, didn't get them met, and I didn't get the trade. So if you caught this, I know a lot of you guys are euro dollar bulls and liked this idea. So if you're a euro dollar bull, congrats on this. This is looking good so far. Target ideas, again, retest of this structure high. We can mark this as a possible target. So target here. And then I think if you look at the daily chart, you might be able to find more targets, right? So we get this kind of target, which also extends over here. You could make a case for a good size run to the upside on the euro, could get us up to this level here, 1.09. So again, we'll see. But right now, price action seems bullish. We got nice higher highs, higher lows, right? That could be a nice start to perhaps a leg higher on the euro dollar department. So keep an eye on the euro. I want to show you guys the COT data. I've got the COT indicator pulled up for this is Aussie dollar, but let's go look at euro. Where is this? Here's the euro. This is the COT indicator. You know, we could name this something better. Let's do this. It's really the smart money indicator. That's cool. COT. We just edited that live, but I think that makes sense. It's a smart money indicator. It is basically the COT data. And what you can see here is we just added this. I mean, we experimented with this 15 minutes before going live here. So the COT indicator is showing us the red price, right? Price versus the net positioning. And what you can see here is that we've had a rounding out, okay? Now, COT data, if you're looking at the euro against the dollar's still technically more favored in terms of COT. But look at the way price has been rounding out. I'm sorry, bias has been rounding out. You can see that perhaps we're getting a shift. Now, notice, guys, if you had looked at the COT indicator on the euro over here, it's giving you a nice round out signal here. And sure enough, the red line, which is price, continue to sell off. Now we're getting a round off on the bottom. Another possible bullish confirmation for the euro dollar is looking at COT data. Okay. Now, again, this is showing you the white bar is the net positioning and red is the price of the euro dollar. So price has been trending lower, but now notice what's happening. A round out on the COT data and price is starting to break out possibly the other direction. Now, this is a key indication of what could be happening next. Okay. So keep an eye on this. I think that's really interesting. Powell speaks at 2 p.m. Eastern. That is in about an hour and a half. And we'll have some guests to go over the show with us, hang out. Ivan's in the chat. I thought, Ivan, you'd be asleep by now. Isn't it like really late where you are? I think we were going to invite you, but we thought you'd be asleep by now. It's like 2 p.m. Eastern is like what, 1,000,000 o'clock at where you're at? I'm just kidding. But anyways, let's keep going with this concept. So COT kind of supports a potential relief push on the euro dollar. And if you look at the longer term charts, 8 p.m., Ivan? Okay. Ivan, we might have you, I know it's on the fly, guys, but if Ivan wants to come on, Chandler or James can shoot Ivan a message and work it out if you'd like. You're welcome to. Producers will coordinate something there. But anyways, again, a possible change in direction on this euro. Big move lower, starting to round out. We're possibly seeing that shift. I think it's really interesting. We'll keep an eye on this. By the way, guys, if you want this COT indicator, this is available on the EDGEFINDER. And if you don't already have the EDGEFINDER, it is currently 45% off right now for our Black Friday sale. If you'd like more information about that, if you want access to our COT indicator, our smart money tracker, all the stuff that we have, you can actually get it right now. We have a lifetime membership for the software. It's a one-time payment. You get access. You don't have to pay month to month, nothing like that. If you'd like to get access to this for a one-off 45% off discount, that is available right now. Click this link. It'll take you to the point where you can get more information. Somebody on our team will hook you up with a copy. So if you want this data, message us right here. We'll chat with you about it and we'll get you hooked up with a copy of the EDGEFINDER. So take advantage of that. It also, of course, includes the full data, which is the COT Smart Money Tracker, right? You can see it all here. So all the stuff that we usually show in the videos. So if you'd like access to that, then message us right now. Again, it's our Black Friday 45% off sale. So take advantage. It is that super savings that you're getting right now. If you do decide to get a copy, it's going to be the best price of the year. And take advantage. Message us. The link is in the chat right now. All right, so we're going to go to Gary here in just a second, guys. We'll take a quick break just to thank our sponsor, and then we're going to bring in Gary, Mr. FX Big Dog, to take a look at some setups as we prep for this big news event with Jerome Powell coming in soon, right after this. Frank, are you really trading right now? We are literally traveling through space.
Yeah, I mean, thanks to 8cap, I can trade at any time and anywhere, even in space. And I get a free EDGEFINDER with it too.
That's pretty cool, but honestly, there are so many other brokers that I think are better.
That's it.
I'm ejecting you.
All right, Frank, let me back in. Come on. I'll sign up for 8cap, I promise.
Don't get lost in space. Trade with 8cap. If you'd like more information about how you can get a free EDGEFINDER, click the link that's in the chat or description to speak with one of our representatives and sign up with 8cap. There's some great free perks available. Check it out down below.
Frank!
And we are back with Mr. FX Big Dog. What's up, Gary? How you doing?
Hey, Nick, I enjoyed that commercial on 8cap. It was pretty good, solid.
I'm glad you did. Yeah, we've been having fun. We our theme this month, Gary, is space. So we're blasting off to space. We've been doing this thing on the stream where we just have the producers, editors, they have fun with it. We just re-theme the entire thing every month now. So it's we've been having a lot of fun with it. But Gary, I'm glad you're back. It's been a minute since we've chatted, and I think it's no better time to talk as we prep for, I guess, what is probably the biggest event of the week. Anytime this guy speaks, you know, Jerome Powell, he has a lot of influence in the financial markets. I'd love to just give you the floor for a second. What are you thinking? What are you looking at here as we're about an hour and a half out from the event? What are you thinking?
Yeah, I see he's going to be a panel speaker, so he's one of many that are going to be talking about the markets. But I don't think he's going to be talking too much in depth about what the decision is going to be based on the rate decision. I think he's going to give sort of a very soft introduction to what's going on. But I don't think anything's going to really hit the market. That's what I think. I don't think it's going to hit the market because I know that the next week we have CPI coming out. Last month, CPI year on year showed at 3.7%. It was based on forecast, never changed. It was set what the previous month was at. So nothing changed. And this month, we're going to see what the CPI is going to be on Tuesday, year on year. And if that changes, then only then I think the Feds are going to start changing their sort of tone. as to what they're going to be doing. If the interest rate shows, so not the interest rate, if the inflation number shows higher, then yes, there could be this indication that the Feds are now going to consider raising rates once again and start that move. But I don't think it's going to happen this year. December 13th, they get together for a meeting, and well, I don't think they're going to raise anything on the 13th of December, but I think something might come out towards the new year if the inflation number does continue to rise.
Yeah, that's fair. And I think Gary, we had just such a massive you've got the dollar pulled up. We had a massive move in the markets here last week with what was just a chaotic week, right? You had
Yeah.
NFP, you had Jerome Powell making some monetary policy statements, right? Some more clear cut stuff. And I think you're right. I think, CPI next week is really what the market is kind of prepping for.
Yeah.
But I think that in the meantime, the market kind of has this gap where we have, okay, clearly the next really big news is not till next week, and market participants are trying to feel out like where are we at? Is this going to be an environment where things are really truly changing pace, right? We saw a dollar that was just trending up tremendously off of the fear that inflation was not going to be able to be squashed very easily. And then, again, we kind of had this pivotal change in the narrative last week with NFP coming out cooler than expected. But I want to get your thoughts on this because it is, of course, a topic that is tricky. Was the jobs numbers and the FOMC, are you bearish dollar? Are you bullish dollar? What do you think? I'd love to get either a technical or a fundamental or both perspective from you about the US dollar.
Yeah, I'm definitely bearish on the dollar. And it's not just because of what's happened here in the U.S., but what's happening around the world, with the U.S. getting involved with the war on Hamas, with Israel, which is of course what they need to be doing. But also again, also understanding that who we really going against. We're going to go against Russia. We're going to go against Iran. We're going to go against all of these countries that are oil producing countries. And what's going to happen is, I think the reason why I'm long term bearish on the dollar is because we're still not producing the oil here in the U.S. We're going to start seeing oil pushing up higher. And in fact, if Russia does get involved in the war, and again, I'm not saying it's going to happen. I'm speculating right now. But if they do get involved in Iran does get involved as well, then yes, this could literally push the price of oil higher. And this means that we're getting closer and closer to that sort of final judgment where we're going to have or not judgment, decision, where we're going to have China, Russia, Iran, and all of these countries that are oil producing countries start deciding to start pricing oil in a different currency. And that means the reserve currency of the world is going to be at stake. We're going to lose that right. And if we do, inflation numbers are going to be a lot worse than what we have right now. Plus, of course, if we don't stop producing oil, we're definitely going to have huge oil issues in this country. So I think the way we set up currently right now is internal and external for the dollar doesn't look good. Doesn't look good at all.
Fair enough. So Gary, with that being said, I'm kind of in the same camp. Well, with the dollar bearishness, I think, like I said, the NFP saw some cooling in the jobs numbers. With the dollar in mind, looking at the US dollar chart, combine that with gold, either one. What are you trading gold off of this at all?
Yeah, absolutely. So
Okay.
so two things right now, bringing it back to technicals now, taking fundamentals out of the equation, look at technicals. We did see both dollar and gold rally of the fear and of the war. And this happens every time we have war or rumors of war. We see both gold and dollar rally, which is weird because you would think that if gold is trading against the dollar, that there would be, of course, one go in the other direction. But it moved in the same direction. This happens a lot during war or rumors of war. Now, the reason for that is because they've seen a safe haven. So a lot of money being flown into gold and into the dollar, and both of them have been very strong, and so they've been moving both in the same direction. Now, the deal is this. With the technicals, I'm looking at the dollar right now, and I actually have to go ahead and squash this down to, let's go to this is a weekly time frame. And we see a lot of resistance here at the top. So if this is just a flat line, let's say flat support there, we got a resistance coming off the top right here. We've just come off the top. We're expecting dollar to fall back down to the support down here. Now, again, this is the weekly time frame. We're in extreme overbought conditions right here. We're definitely thinking bearish on the dollar. If we go down to the daily time frame, once again, we're looking for dollar to drop back down to about 12,032. And this pattern that's just appeared right here is, and I'm going to take all the technicals off this, is a typical what I call an irregular flat. It's not what I call it, it's Elliott wave structure. It's an irregular flat, which means that price goes down, comes back up, fails to take out the low right here, then comes up to a deeper correction move, and then from this point, this is our sell zone right here. We're looking for price to start working its way back down to our 1.618 extension, and this is setting up exactly the way it should in order for us to see price drop back down to this level right here. So I think we're at a top on the dollar, and the dollar is going to now start seeing some further downside move in the next coming weeks ahead of the CPI number, as well as, of course, the rate decision in December 13th. Now, gold, if we go to gold, let's take a look at our gold setup right here. This is gold, and we all know that I spoke about gold dropping back down here to, hang on, sorry, my bad, here, towards that 1813 level, 1815 level, which we did get down to that low. And since we've hit that low, price has moved back up. I see gold doing this in the short and midterm right here. I see gold giving us a little bit of a rally because of this movement right here. A little bit of rally, maybe around about 1977. We're going to get a final dip back down to around about 1930, maybe just slightly lower than that. And then we're going to start going back up again, and we're chasing after 2036.
Okay, fair enough.
This is all not spectacle. I'm not speculating it in this. Well, I am speculating, but I'm not a thumb sucking this. This is pure technical analysis that's given us the signs and the levels that the market is indeed trying to work its way to.
Yeah, and I think, Gary, when it comes to gold, I've been covering gold a lot and thinking, if we switch over to my chart for a second, I've been kind of in the similar camp. Like I'm longer term bullish on gold, right? Like I think like you kind of have to be like super long term because it's something that, they print dollars every day and they don't print gold, right? There's only so much of it. And so in some cases, even if you're bullish though, I think that there's that fair argument, as you're saying, in the kind of recent price action, the daily chart. We've seen a little bit of this head and shoulders pattern, right? We've seen a little bit of some give back. And actually, the other day, I was speaking with Frank on the stream, and I was asking him, is this starting to get bullish in this area here? And we decided against it because, again, kind of that head and shoulders pattern, not as easy of a decisive price action period as we saw over here. And so I paused, and I'm glad that I did because price has kept going. And I think that, as you mentioned, there may be this room for a little bit of an intraday pullback, push down. And then from there, I think from a daily chart perspective, you're starting to run into some support, as we can see some daily structure there around that 1930 mark, which will be interesting to see because, again, by then, who knows, maybe we're right up on the doorstep of CPI, and perhaps CPI is really cool and that suddenly surges gold. And perhaps to your point, Gary, about the correlation between gold and dollar, perhaps that's where we kind of see it come back into fruition, where CPI numbers hit and we get this binary decision-making point in the market where if dollar is weak, gold rallies, and if dollar is strong, gold falls. So I think it's probably a reasonable thing to say to everybody who is in this audience, of course, lots of gold traders, be very patient during this time because, again, you have CPI on the horizon. So it is possible that we see a little bit of slow back and forth price action, or if Jerome Powell or anybody on the panel says anything of revealing, nature, you could get some sudden movement. So be aware of that. But I think to your point about the dollar and gold not necessarily moving as they usually do, right? There is that geopolitical twist with the Middle Eastern stuff, and we'll have to continue to see that. But I think, over time, truthfully, the weird thing about markets and crisis is that the markets like move past them oddly quickly. Like, at the end of the day, obviously that stuff is horrible and terrible and sad. And you hope for resolutions. But when it comes to the markets like focus, it's pretty quick. You know, you look at the history of invasions and wars and stuff, and within like a few months, the market's completely not thinking about it, and prices do weird stuff after. In fact, I think there's like this thing where following like most US invasions, the stock market's up like pretty substantially a month later. It's a weird phenomenon, but regardless,
it's the
yeah,
fear,
go
right?
ahead.
It's the fear that kicks in, right? So when something
Mhm.
happens, I mean, we got to think about it. What moves the market? People move the market, and it's their
Mhm.
behavior that makes the market move in certain direction. And so every time something happens, it is the initial fear that kicks in, and the markets then react accordingly. But it's never really going to be set in stone because eventually people do forget things. People move on. It is what it is. Once that initial shock is over, then the markets just simply take on the current trend that it's leading into and just continue to trade that way. And that's
That's a good
why
way of putting it.
yeah, and that's why a lot of the times, like news announcements, when we get into news announcements, I've got a lot of traders that are following a certain trade ideas that I do, and we're in positions that, let's say, we long a US dollar CAD, and we get a news announcement comes out, and the market goes down, and they start panicking. I go, oh my gosh, it's going against us. And I'm like, well, you know what it is, but if you look at the overall technicals, this is telling us what the behavior is going to be. This is
Mm.
just the reaction, the fear reaction to the market now. That's not necessarily where the market's going. And a lot
Yeah.
of the times, this could be just a wash and rinse from a broker trying to clean up, not necessarily the brokers itself, but just the wash and rinse that the market does overall, where it clears up stop losses on a down, and then it takes off in the opposite direction. Not very long after that, and we can see it happened with the Aussie CAD decision with their rates. Right, they raised the rates 25 basis point yesterday. What happened to the market? The market dropped back down south, and then it started spiking back up again. So initial reaction doesn't dictate where the market's really going, because if you look at the technicals on the Aussie CAD, technicals tell us that we can see a further upside move, and that this corrective move, this dip that we saw, was just part of what the market's looking for. So it is what it is, you know.
Yeah, and you mentioned Aussie CAD, not a pair that I usually trade, but I'm getting the same kind of reading. Edgefinder's giving us a bullish reading right now. Part of the reason for that, uh, overall trend, seasonality seems to be favoring it, and some of the economic figures seem to kind of favor the Australian dollar over the Canadian dollar. I'm liking that idea too, Gary, as you mentioned it. Like I said, not really a chart that I usually trade, but pretty clean price action. You've got the Australian dollar against the Canadian dollar pulling back. We're at a support level currently. It'd be interesting to see if that one wants to continue to push higher from here. It's been on a nice upward trend recently, and now giving you a little bit of a pullback, and even giving you a little bit of this kind of
Falling
little
wedge.
triangle.
It's actually going to
Sorry.
be a falling. It's a falling wedge, yeah. And so
Yeah.
that's those are the key things right there. The thing that you pulled up. If you pull up my chart right here, I'm going to show you something as well. That if you
Yeah.
look over here on the Aussie CAD daily time frame, on my chart, you will see that you had this big falling wedge taking place right here, and it's going to pop up there. There we go. So we got this big falling wedge taking place over here. Now, normally we expect price to drop back down here. It didn't, and it started rallying back up again. And so this is where our target was for the Aussie CAD. We hit the target almost to the pip right there, and then we had pullback. But the overall currently right now still shows us that momentum is still up. We've got a slight overbought, but it's not quite in there. So this support right here is holding, and the fact that you've gone down to a lower time frame, I've got the 1 hour right here, but you've got the let me go ahead and take that out. You've got the 4 hour, but if you look over
Mhm.
here, you got this falling wedge taking place right here. And so what happens is that we look for 1, 2, 3, 4. So we got to take out the low. So which means that the Aussie CAD's going to take out the low right here. Once it takes out the low and tests that trend line, this is actually a buy zone where we can look for the price to go back up north again. And if we hold there, then we're absolutely heading up to the next upside target, which is I believe at 98.79. So we're looking for price to go up to this level right here. Yeah.
Fair enough.
Yeah.
Yeah, that's awesome. I think yeah, it's one of those things. It's like when you're trying to weigh the odds of something, Gary and I, we kind of oscillate, as I do with many of our guests. We kind of go between the fundamentals and the technicals. And at the end of the day, there's use cases for each. Gary, you mentioned like with the dollar, you are more leaning towards a bearish general bias based on what you're seeing going on in the world, but then you're actually waiting for the technicals to confirm and to be that more concrete entry exit process. I think a lot of traders, they typically lean more into the technicals because it's a little bit more like simple to understand than just all this theoretical, fundamental kind of, it's in the, the jargon and all the news reporting. There's so much to fundamentals that can be tricky at first. But at the end of the day, combining them with technicals can be a really, really powerful thing. I do want to say, Gary, I won't keep you on too much. I do appreciate you coming on and giving us your insights again on a really important day. I really like the Aussie CAD idea, and maybe we'll have to follow up with you on that one as we circle back next week.
Absolutely. Nick, always a pleasure. Thank you very much. Appreciate it.
Yeah, very, very, very welcome. And also, I do want to say for anybody who's watching who enjoyed Gary's way of going through the charts and his analysis and his trading style, please feel free to find him on his YouTube channel here. Go subscribe to Traders Network Club here on YouTube. And you can find, I'm sure he has like Telegram channels that you can join. Head over there, find out all you can about Gary. Again, that is free knowledge that might be helpful to you. So thank you, Gary, very much again for coming on today.
Thank you, Nick. Cheers. Bye-bye.
See ya. All right, guys. Yeah, really, I hadn't even seen Aussie CAD, but it's a really clean chart. Again, you've got this nice overall upward trend, price pulling back, and the cherry on top is you do, in fact, have the EDGEFINDER giving us this nice overall bullish reading. Now, what the EDGEFINDER does to give you a bullish or bearish reading is it looks at like a bunch of different factors, right? Gary and I just quoted like 15 different things. We talked about, the economies of different things and the demand for the dollar and what's all that based on. Well, it can be a lot. And so what the EDGEFINDER aims to do is it aims to look at a lot of the data that's out there and automate that process for you. It's kind of like a chat GPT, but for trading. It's not nearly as adaptable as ChatGPT, where you can ask it to do whatever, but it gives you a nice rule set of things and it generates a bullish or bearish bias. So this is our top setups page. I like to also think of it as like a watch list. This is my watch list every day for possible setups. So I don't really trade the Australian dollar against the Canadian dollar very frequently, but because the EDGEFINDER spotted this bullish setup and Gary also liked the trade, and we have a nice technical break here, I don't hate this trade idea. In fact, it's not necessarily super correlated to the dollar. And so you might get a little bit of a nice signal there. I do also want to take a look at the Australian dollar against the Japanese yen, which also I mentioned looks kind of nice. If we pull back into this area here on the Australian dollar against Japanese yen, I might be interested in buying this one, to be completely fair with you guys. It is giving us a nice bullish reading on the EDGEFINDER. And again, I just don't trade Australian dollar, Canadian dollar. I usually avoid, non-yen or USD pairs. If I'm going to trade forex, it's just what I am most comfortable trading and what I pay closest attention to. But I do like the Australian dollar against the Japanese yen. And for those of you guys who do trade Aussie CAD, keep an eye on this one. It's a really interesting setup today. As we hit that support zone, we're very close to it. You had a nice rejection candle off of the lows here. So I would say, if you're somebody who watches the Australian dollar against the Canadian dollar, an interesting chart to keep an eye on as we approach Powell's commentary today. Another chart to take a quick look at is the NASDAQ getting a +8, guys. NASDAQ +8. That's a strong bullish reading. And so you might say, the first thing people will say, the EDGEFINDER is giving you a +8. So, okay, but it's already made the move. Well, yes, but it also gave us a bullish reading much earlier than this. And now, even though it's bullish, it doesn't necessarily just mean, oh, just go buy it just because it's bullish. It also means like, okay, wait for pullbacks, wait for setups, wait for stuff that meets your technical criteria for entries. So I'll tell you something. I've got an S&P 500 trade already. I'm long S&P, but I'll be clear with something here. If the NASDAQ pulls back, I might actually be interested in picking it up long. Now, again, we'll have to see if it gives us this pullback, and this is a 4-hour chart, so this is a longer term idea. I would say, yeah, short term, it might be a little overdone, but if it does pull back, I'm interested in potentially getting long NAS 100. So for the NAS traders out there, I am still interested, and I am also still bullish I just don't have NAS. I have S&P. So I'm currently long S&P 500 as we approach the news. Guys, we've got to see if we can get a decision at this level. We've been sitting at resistance for quite some time, and it's time, right? We got to make the decision. I think I may be trailing stops, to be completely honest. I think it's time to probably trail a stop on this trade. It's been sitting here for quite some time, and I'd like to either see a directional push higher or a pullback. So what I'm going to do is we have James joining us here in just a second. So I'll let James do the news. And while he does that, members, I'm going to update my trade. I'm going to let him kind of go solo for just a second and do the news with you guys, if that's cool with James. And then I'm going to trail my stop loss here. So I've got to do that. Again, for those of you guys who are not inside of our Discord, we will probably be placing trades this afternoon. There's a couple things that are on my watch list. If you want to get notifications sent directly to your phone, every time Frank or myself takes a trade, Frank has a forex trade that he just took, whether it's my forex trades, indices trades, Frank's trades, you get a lot of different action between the two of us. We trade gold, we trade oil, indices, FX, and sometimes even stocks and options. So if you'd like access to the trade notifications whenever we place a position, you get a full breakdown and notification each and every time. Like I said, with the indices, I am currently long S&P 500 and still trailing a stop on this one. We've had this massive runner in the community. So we'll see if we can let this one run longer. If you guys want access, here's how to get access. It is currently 45% off to get a Discord VIP membership and get access to those trading signals sent directly to your phone or to your desktop. Again, you get several trades a week from us, depending on what's going on. And of course, you get the full breakdowns and explanations with every trade. It's the purpose of the software, the signals are to be informative and to give you full breakdowns so that you actually learn something. And finally, the best part about the membership that we offer right now, it's 45% off and it's a one-time price. So you pay, you get in, and you're in the community. You can join the coaching webinars, the chat rooms. You can see the trade signals for good. As long as we're around, which hopefully is for a very long time, it's a one-time price to join. So take advantage, click that link, chat us, get access. And I'm going to hand it over to James here for a second to do the news. James, if you want to take over, we'll bring him in, say hello, and then I will just trail my stop off camera for a few minutes. So you cool with that, James?
Yeah, I'm cool with that. But I will say I have something kind of fun, a little different planned for the end of my news segment that I think that you would be pretty interested in. So I can do the news for a little bit, but if you want to join me towards the end of it, feel free because I have something a little bit different planned.
Okay, sounds good. I'll join back right after I'm done trailing a stop and putting out the alert.
Sure, sounds good.
Okay, be right back.
All right, everybody. So while Nick is doing that, we're going to go over some more news. Funny enough, I saw some people commenting about some of the stuff that we're actually going to talk about here in just a second. So let's go ahead and hop right into it. So as we all know, we are here because Powell is speaking in just over an hour from now, 2 p.m. Eastern time. Jerome Powell has some stuff that he wants to get off his chest. No, I'm just kidding. He's going to be talking, and depending on what his tone is, more hawkish or more dovish, we could potentially see some big moves in the market. He did technically speak yesterday, but it was more of kind of like an introductory thing. So really wasn't market moving. He didn't have much to say about monetary policy or Fed plan or the dollar, really anything like that. But today should be much different, and we're definitely looking forward to 2 p.m. By the way, I want to mention this as well. I know Nick sometimes talk about the Telegram, and I promise I'm going to keep this really, really quick. But if you want to join our Telegram and answer our poll here, you can see, I'm going to pull this up. Let's see, can we see this? No, we cannot see this. Hold on. I have to stop sharing my screen, and I have to stop sharing my tab, share the screen. Give me 1 second, guys. I promise this is going to be really quick. You know what? Never mind. I'm not going to do it because then I'm going to be sharing the what's it called? The stream back end. But I have a poll in the Telegram. So if you're in the Telegram, feel free to answer the poll. Is Powell going to be hawkish or dovish? Have a hawkish or dovish tone during his speech? Friday, we have UK GDP numbers expected to come out at 0%, as well as preliminary University of Michigan consumer sentiment. Next week, Tuesday, GDP, I'm not even going to try and pronounce this because I forget how to pronounce it every single time. Nick and I went over this morning and I've already forgotten. So that is happening, as well as CPI in the US. Wednesday, we have UK CPI as well as PPI and retail sales in the US. That's the normal report, as well as the core report, Empire State Manufacturing Index, as well as Australian unemployment rate. Thursday, we're going to have US unemployment claims like we do every Thursday. And finally, Friday, UK retail sales. Now, let's get into what's happening right now. We were talking about this in the office earlier, and I noticed somebody talking about it in the chat as well. Some of the big media company stocks have been booming today because of the SAG-AFTRA strike finishing. So SAG-AFTRA strike is over, and what does that mean for markets? Stocks like Disney and Paramount are up today because production is finally getting back on track and continuing today and into next week and the following months. We're finally seeing production back in Hollywood, and honestly, not just Hollywood, across the country is finally starting up again. So that's been good for stocks like Disney and Paramount. On top of that, Bob Iger, who, if you are unfamiliar with Bob Iger, he is the CEO of the Walt Disney Company. He's kind of like this big legendary figure that brought Disney into their, what it is today, this huge, global conglomerate of all this stuff. Bob Iger was kind of the figurehead of a lot of that stuff. He left the company a few years back, and a different CEO was running it, and he did not do a great job. And so they brought Bob Iger back a couple years ago to kind of salvage Disney. And truthfully, so far, he has not done a great job. And that's why he's signed a 2-year extension, not because he's been doing such a great job, but because he has a lot more work to do to get Disney back to what they want it to be. So I thought that was interesting as well. Warner Bros. Discovery slightly down on the day, and AMC has absolutely plummeted after they filed to offer up $350 million in common shares. So SAG-AFTRA strike is over. It's good for some companies like Disney and Paramount. Warner Bros. Discovery slightly down, but not too much of a move. But AMC has filed to offer up $350 million in common shares, and their stock is tanking big time. I thought this was interesting too. I was going to ask Nick about this, but I'll if somebody can comment in the chat right now, if they could guess what this stock is. This is, I'll give you a hint, is also media related. Someone can guess what this stock is. You win the stream for the day, and you can take over the stream because this stock just recently had some news come out over the past 2 days. Again, it is a media entity, entertainment entity, and then it skyrocketed after this news. Nick, do you have any idea what this stock is?
Well, is the price of it actually $71.61?
I don't know. I looked it up on TradingView and saw this.
If it's my guess is like Disney, which we talked about earlier.
It is not one that we have mentioned yet.
Okay. Stock that's up like this today.
I believe I saw the headline that their stock skyrocketed after this announcement that they made a couple days ago, and I went and looked at it myself and saw this and thought it was kind of funny that after they announced this project that they're going to be working on, their stock went up so high.
I give up. What is it?
Tony Oliver's on the right track with a game company. This is actually Nintendo stock. Nintendo announced the live-action Legend of Zelda movie, and their stock went crazy. So I thought that was kind of interesting. Yeah.
I guess it makes sense because it is probably in yen. That's why. So it's yen. That's why the price is so high, because US dollar denominated tickers, if one was $7,000, it would just be crazy. But anyways, yeah, that's awesome. Thanks for sharing that, James, on the Nintendo side. Not expected, but keep going. Oh, also, James, just to follow up, I can show my screen for a second. I know you mentioned the poll and that you mentioned. So just to give people a chance, Chandler, if you want to drop the link to the Telegram, if you guys want to vote on the poll that we're just putting up, Powell's up next. Is this speech going to have a more hawkish or dovish tone? James put that together for us in the Telegram. Guys, go vote. We got 660 votes, by the way, on the US dollar poll earlier. 660 votes, came out about 60% bearish, 40% bullish. I'd love to get you guys' thoughts as James put out this awesome poll for us. Let us know, is Powell hawkish, Powell dovish? And again, you just join the Discord. I mean, the Telegram, the link is now in the chat. So keep going, James. I just wanted to remind people about the poll.
Yeah, and so speaking of the Japanese yen, the Bank of Japan announced a $88 billion stimulus. And now there was a lot of information here, too much to put in a couple bullet points. So instead, I'm going to do what I did earlier, and I'm going to show off this article from Bloomberg very quickly. This article on Bloomberg titled "Japan's Cabinet Set to Greenlight $88 billion Extra Budget." About 2/3 of budget to be funded through extra bonds. Poll suggests public unimpressed by Kishida's stimulus package. And this was written by Erika Yokoyama and Emi Urabi. But Prime Minister Fumio Kishida's cabinet is set to greenlight a $13.2 trillion yen extra budget. That is $87.5 billion in US dollars. Extra budget to fund his latest economic stimulus package amid concern Japan is continuing to spend above its means. The additional budget will be partially financed by issuing 8.9 trillion yen in additional government bonds, according to documents obtained by Bloomberg. The remainder will be funded by a surplus from the previous year and a small portion of extra tax revenue and other sources. The cabinet is likely to approve the budget Friday. So there is a lot of information here. This is something that people have been speculating the Bank of Japan may do here pretty soon. And it looks like tomorrow, it looks like it's going to be greenlit most likely. And yeah, $88 billion stimulus for the Japanese yen happening. So yeah, again, if you want to read more about it, you can find it on the Bloomberg is where I found this article. I'm sure there's lots of other articles about it, but definitely going to be very interesting to see what happens with the yen tomorrow.
Yeah, absolutely. That's a really good one. And again, for yen traders, euro yen, dollar yen, Aussie yen, interesting to get that stuff. And again, all that stuff with anything with stimulus or Bank of Japan action, the yen has been very volatile because of it. So that's an important update for sure.
And then I wanted to finish with something fun. And in fact, I want to go back to this image right here. I want you to take a good look at this picture of Jerome Powell here, because we're going to come back to this photo in a little bit. I said I was going to switch it up with something a little bit different to end our news segment today. And we talk a lot about Jerome Powell on these streams. And he's a very popular man. And I thought it might be fun to learn a little bit more about Jerome Powell. So I have some Jerome Powell facts for us so that we can all get to learn get to know the man behind the Fed a little bit better. So Jerome Powell was born February 4th, 1953. That makes him 70 years old. In Washington, D.C., funny enough. He's spent his whole life in D.C., it seems. He has a degree from both Princeton and Georgetown. His degree from Princeton is in economics, and he has a Juris Doctor from Georgetown. He is also the first chairman of the Fed in 40 years to not have a PhD in economics. 1 week ago today, so it was on November 2nd, was Powell's 6-year anniversary as the Fed chair, being appointed Fed chair. He was appointed by Donald Trump. He has 3 children, and he is known to be an avid biker who sometimes rides his bike to work. And then I also saw this timeline here, so I'm not going to go through this whole thing, but this just kind of shows what he did before he became a member of the Federal Reserve. And then I thought this was funny because we have spoken about Elizabeth Warren in the past. So I just wanted to highlight this part right here. December 5th, 2017, the Senate Banking Committee votes 22-1 in favor of advancing Powell's nomination. This is the nomination to become the next Fed chair. with Democratic Senator Elizabeth Warren as the only member in opposition. So we have seen them clash before. We remember that clip of Elizabeth Warren. She was kind of leaning in pretty heavy on old JP, and apparently they've had beef for a long time, it seems. So I thought that was interesting. Now, the reason I wanted to go back to that photo of Jerome Powell here, if you were to compare this photo of Jerome Powell with this other photo of Jerome Powell, you would notice he looks a little younger in this photo. He is an older man, you know, and some time has passed, but this is Jerome Powell before taking the Fed chair position, and this is Jerome Powell after taking the Fed chair position. I just think he has a stressful job, let's say. Jerome Powell has a very stressful job.
I was gonna say that is a very, there's like the pictures of the presidents before and after. It's like and like there's like this history picture of just like young men going off to war during like World War II. They'd like come back looking like an absolute like animal before they look like a baby. But James, thank you for that again. Very, very insightful stuff as we get ready for this meeting. I want to jump over to some charts now that we've got some volatility kicking in. So thank you for coming on and for getting us set up for the event today.
Absolutely.
All right. We'll see you later, James. Guys, gold is on the move. So actually everything started to move here in the last few minutes. We had some volatility kick in. I want to go through some charts here. We're looking at the hourly chart on gold. And excuse me. The gold chart here, you can see we hit support around 1946. Price seems to have moved with a lot of strength here recently. If you're getting more granular on the lower time frames here, you've got some support potentially here. This is probably a 61.8% retracement. Let's see if that's right. Yep, there's a 61.8% retracement off of this recent explosion higher. Gold, if you're a bull on gold, which I am, it does look like we've seemingly found a bottom. If you're more on the day trading side of things, this thing, if it does give you a dip back into this area, it very well be making a move, a leg higher here. Gary and I discussed this before he left the stream. We talked about this idea, potential break, retest, continuation. Well, not the break and retest concept, but the idea of price may be looking to retest here. So gold bulls, it seems like we might have found a short-term bottom here. Now, will this become a bigger term bottom? I'm not quite sure. I think, you know, in terms of the day traders out there, for the lower time frame traders, gold bulls, can we get a pullback here? And if so, does that set us up for a nice push right on up to this point? That's a, you know, let's see, in percentage form, that's, you know, that's a 1% move on the price of gold. If you look at, you know, pips, that's 1860 pips. If you look at, just depends what you're trading it on. If you're a futures trader, whatever. The point is, there's a room. I think there's some room here for some intraday action. If you're a day trader on the gold market, pullbacks, continuations could be setting up. And I think the EDGEFINDER is still giving a bullish reading. Nope, not quite. It's just lost its bullish reading. But I think we might get a little bit of confirmation pretty soon if we get some decisive price action one way or the other. I think the reason gold probably lost its bullish reading is because, let's see, it's probably trend reading. That's my guess. Yep. The trend turned bearish short term. So we're getting some short term bearish readings on gold, which I think is fair. You know, if you're looking at this thing, if it breaks out higher, then yeah, trend probably flips bullish. But right now we're still kind of struggling. But I do think if you're like an intraday trader, just kind of trading range to range, you may get a little bit of a pullback, continuation, push back up into this area. I made this point earlier, but I do want to also point out just the importance of institutional money right now and in terms of where things are positioned. I want you guys to understand something about COT, right? The COT data, the smart money tracker, the purpose of it, as I mentioned earlier on the show, is to track what the professional players in the markets are doing. At the end of the day, the market movers are the pros. The ones that have the most money move the markets the most. And so what's so cool about the COT data is it gives us an ability to look at the positions on average of the pros, right? So what we've got here is we're looking at the net positioning up top here. And we're looking at the latest trades, the latest buys and sells in the bottom half. We'll look at the bottom half in just a second. But first, net positioning. We've got the Japanese yen, the Australian dollar, the Canadian dollar, and the Swiss franc. Institutional money is betting bearish on these things overall. What about the other side? Silver, gold, oil, USD. These things are the most bullish from institutions. Okay? Now, before you just jump to the simplistic, I know what a lot of traders will do is they'll read that and they'll say, oh, so that's all I got to do is just look at those things. Maybe if you're like an investor, then you could possibly just stop there. But if you're a trader, if you're somebody who wants to understand, does anybody, how many of you guys, if you use COT, can you just do me a quick favor? Type I use COT. If you're one of my COT train friends, we did a gold train earlier. Let's do a COT train. If you use COT, let us know. Just comment really quick, and we'll get you set up there in the chat. Let us know. But what I want you to understand, if you're somebody who uses COT or you're learning about COT or you're trying to understand it better, let me explain something. The net positioning is what most traders, that's where they stop. They only look at this part. But the true value to traders, if you're an investor, I think this is fine. If you're an investor, this is like all you need to look at. Okay? In my opinion. Okay? All you need to look at is net positioning. If you're a trader, whether day trader or swing trader, this is where we got to pay attention. Okay? What this shows us is the latest moves in the COT, okay? Because this moves really slow. This is good for investors. This stuff moves a lot quicker, and it's much better for day traders and swing traders. So when we take a look at this chart, what we can see here is all of our assets on the left and all of the net change on the right, okay? This shows us the net change. This shows us the latest filings from institutional money. Okay. So check this out. Gold, bullish change. Keep your eye focused over here. This latest change shows us the latest money moves. This is the biggest trades, or this is the latest trades, right? Latest buys and sells. NASDAQ also really bullish, right? So before you get overly bearish on something like gold or the dollar, gold or the NASDAQ, be careful. You've got institutional money making moves into that direction. They're getting bullish on those things. And context, guys, for the bears out there, or for people who are wondering what the bearish stuff is, it's the Nikkei. What the heck? 9%. That's crazy moves. Oil, big sell. By the way, guys, look at this. You want to see COT, how cool it can be? Look at this. COT said that at the beginning of the week, it gave you a signal. Bearish oil. Look what happened. If you got the signal there, boom, right? Institutional money left the stage at a rapid pace. So my point with showing you guys COT data so frequently is just because it can be so powerful to what institutional money is doing to track the trades of the players at the table that move the markets the most. Okay? We have all of your favorite assets here, whether you're a pound trader, right? Or a euro trader. Euro had a slight increase in bullishness. You can track all of these things from the Smart Money Tracker page. If you don't have it, we've been making this announcement, but in case you have not heard, it is currently 45% off our software here. We're a software company out of Atlanta, Georgia. If you would like access to our COT data, I use it all the time in my personal trading. Frank does as well. If you guys want access to the COT data that we have here and the way we've laid it out to make it really easy to use, click the link that's being dropped in the chat right now, and you'll get the chance to message someone on our team for 45% off. Let me show you what happens when you message us. You'll be speaking to a real person, one of my staff members. I have some people who are trained in the software so that they can assist you with it. If you have questions or you want to know pricing options, or you're like, even payment plans, if you're like, I can't afford it right now, but I just don't want to miss this sale, this is the time to message us. Click the link. It's in the chat right now. It'll take you right here. Click chat now. Click Black Friday sale, 45% off, and start chat. You'll be able to speak with a real person right away who will let you know about the best prices that we can do for you on the Edge Finder. If you're a regular stream viewer and you want this data for yourself in case I'm gone for a week or or I don't show you a chart that you're looking for, right? You can always grab it on your own time and go through it at your own pace. So I'm telling you, it is one of the most powerful COT indicators on the market right now. We've built it to be very, very inclusive of what matters the most and what traders are most focused in. So take advantage. All right, so NASDAQ, again, remember, as I mentioned with COT, NASDAQ has also been a nice bullish push, and look what happens there, right? Big push, even the breakout. It's one of those things too, if COT is going really long, it's really cool because it gives you that, oh, we might be more likely to break out. If you know that COT money just pumped a lot of money into something, the chance of a breakout is probably higher. Think about it from that perspective. It can be so powerful in that way. If you have institutional money flowing into something like we do for gold, by the way, right? Gold, NAS, perhaps breakouts are more likely to occur. And when they do occur, they're more likely to be real rather than false breakouts, right? So that's the way I look at it. Just give us a target of NAS 100 because it's selling. NAS 100 is, I guess it's selling if you're looking at like a 5-minute chart or something. Yeah, I mean, that's not really moving too much. That's, I guess, if you're looking at the 15-minute or lower. But in terms of 1 hour, get a little bit of a pullback. I don't think that this is, in my opinion, I don't have any immediate trade setups on this level. If we do get a bigger pullback, perhaps a retest of this trend line at support could be interesting for bullish setups. So if you're a bear, again, that's probably one of the hardest trades in the market right now is to be bearish NAS, in my opinion. But if that's you and you want to ride the pain train, I'm just kidding. I mean, you could be right. It's probably a little bit overbought. To be completely fair to the bears, this thing has had a really crazy run. It's probably due for a little bit of a pullback. And to my own trading, I've got the S&P, which moves right alongside the NASDAQ, by the way. They move pretty much in tandem. Not perfectly, but generally speaking, they are correlated heavily. The S&P, I've got my stop locked in, guys. We're floating $9,500. This is a live brokerage account. No nonsense, no BS. I like to reiterate that because, you see a lot of people who stream and show stuff and they don't ever show you a live account. And I don't say that to brag or to pat myself on the back, but I say it from the context of you as a viewer. If you haven't really consciously thought about this too much, you should probably not listen too much to people who won't show you any sort of track record, any sort of live account, any sort of reliable nature to them, right? It's really important that you don't waste your time learning from people who don't do the stuff that they sound like they do, right? Just be careful with that stuff. There's a lot of time wasters out there, if you will. The S&P for me is pretty straightforward. Game plan is this. We put in this low. We've held this for a while. If we break that, I need to get out. Okay. That's my signal to get out. We have a support zone that we're sitting at currently for the S&P 500. And if this does not hold, I need to get out of my trade. So support here. And if we break out, stop out for a profit. Now, again, I'm in a really fortunate situation where I caught this move that's been massive. It's been one of the top trades for my year, to be honest. Top single trades of the year. I think this is like second or third place. I think the first place is still a NASDAQ trade in terms of pure P&L. But I'm still in this trade. My goal is to hold this trade unless we break support. I define breaking support by, again, clearing this low. And so I'm watching for that. Now, to the contrary, guys, to the bull case, why not just take profits, Nick? Well, I think we have the potential to maybe break out of this and squeeze higher. So I'm looking for this, right? I'm looking for a break above. And if we do get that break above, then I'll be looking to trail stops further. Okay. Hi, I'm from Italy. I cannot trade S&P 500 on MetaTrader. So if you would like to trade with S&P 500 and you are outside of the US, let me just get you something real quick. If you are somebody outside of the US, specifically Europe, I've got the right broker for you. And drop the link right here. Boom. In the chat right now. I recommend 8cap for people outside of the US. There's a link right there. If you use the specific link that is in the chat right now and in the description, we have some really special sign-up perks. Full transparency, this is a referral link, and you'll be helping out the stream if you do choose to use this and sign up with 8cap using that link. But with that said, you will also get some great perks, and we can hook you up even with some free products if you message in on our website to one of our support reps. So don't miss that. Is gold going up or down? I wish it was that easy to just say up or just down, but we can take a look at price action and see if we can find some situations. Okay, gold looks like it probably wants to, at the very least, retest 1970. We've got a zone holding here and a breakout higher. Price potentially could squeeze just a bit higher up into that 1970s. By the way, guys, on that S&P, last thing about that, I did share an update. If you're a member in the VIP group where the signals are shared, I just put in indices trades. I just updated where my stop loss is. On the S&P 500, the SPX, the equivalent to my trade would be a stop loss at 43.35. My entry was at 41.77 on the long side. So my stop is trailed, as I showed you guys just a second ago. I just put out that notification. And heads up, I will probably be placing trades this afternoon based on what happens in the markets. I have several that I'm thinking about that we'll continue to talk about here on the stream. If you guys would like to get this notification, join VIP. It is currently 45% off. We have coaching webinars. If you're somebody who's serious about the markets, don't just go out there and lose your money over and over to the markets. Get right get it right and get in a community that allows you to learn stuff and allows you to see what real traders are doing. Like I said, when I share a trade, when I'm putting on my stuff, I'm putting on my own hard-earned money, right? I'm putting it at risk. So I make that point because I think it's easy to just kind of follow along with people on the internet who are not showing you that sort of thing. And I want you to know when you watch my streams, that real money is being put on the line, and I'm not here to be an ATM or a signals generator for you, right? I'm not here to tell you what to do so you can copy my homework, because that doesn't really do you anything. And if you don't know how to risk manage, you don't know how to trade yourself, you're likely to blow stuff up. The purpose of our group is to allow you to see the trades we're taking with full explanations, breakdowns, and like so you can actually learn something. If you'd like to join the VIP, I made this point earlier, but it is currently 45% off for our Black Friday sale if you direct message us on our website. We've got the link in the chat. Thanks to Chandler. Thank you very much for this. Click this link if you guys would like more information. You'll speak to a real person on our team, and we'll hook you up with access to the VIP group. So gold and dollar can both move up. Yes, Dexter, they actually can. It's weird, but yes. They can, especially as Gary made the wonderful point earlier, when you get geopolitical tension, both can actually move up, right? Because the safe haven effect of both the US dollar and gold can, in rare instances, kind of coexist. However, I don't really expect that to stay the case for very long. So if I'm looking at this and I'm saying, okay, gold seems to have rounded out, what's happening to the dollar? Is the dollar selling off? Kind of, right? I mean, look at this candle, guys. If you're looking at the dollar index, you've got price pulling back. It's been a messy pullback, but it makes sense, right? The markets are waiting on perhaps commentary from Fed officials today during this panel discussion that's coming up in about 30 minutes. And so there's probably some room here for this market to kind of go sideways. So don't be impatient. I think, again, my opinion is, and I say that very, very strictly. I want you to understand, when you watch anybody on the live streams, they can be wrong. And that's the beauty of live streams, is if I'm wrong, you will know, and I will be here, and I can't go back, and you can't do all the sort of stuff that you may see sometimes on the internet, where it's like people will just doctor and only show the times that they were really right. I think the dollar index is getting a little overbought here after this big sell-off that was on really good fundamental bearish grounds. So I think as you pull back into this area, we should see rejection. We should see a continuation to the downside. As I mentioned, I could be totally wrong about that, but as a trader, it's not about being right every time. It's about making it count when you are right. So I have that S&P trade. That is really where the core piece, the most strongly convicted I am right now, is continuing to let that S&P trade try and run. I think we have room to the upside, despite, yes, it being a little bit overbought in the short term. You have to think about something, guys. If the dollar index, let me give you an example. If the dollar index drops like a rock, right, and it gets down here and it's sitting at support, but then let's say that it breaks that support, is it oversold? Yes, but guess what this would do? This would introduce new weakness, new bearishness to the market, because suddenly this level that was so well respected by the bulls previously, if that level was no longer so strong, it could just continue going lower. One of the most dangerous common mistakes by retail traders is thinking that something has gone too far and it's got to come back. Those are like famous last words in the markets, guys. Let me show you something, okay? This is the retail sentiment tab on the EDGEFINDER, and it shows us, we've got some cool data here. This shows us what retail traders have been thinking. Not just thinking, this is retail positioning. So if we take a look at the dollar yen, 80% of retail positioning is on the short side, at least in the data that we've sourced, okay? Which is a good sample size. Well, you take a look at that and you look at USD JPY. Again, remember, the amateur is shorting dollar yen. And look at what it's done. The reason I show you guys that sort of thing is because, again, retail trading mindset usually is when something goes up a lot, I got to short it. And when something goes down a lot, I got to buy it. Because they think, oh, it's about to reverse. But trying to catch reversals is actually so difficult. I'll give you another example, guys. Let's take a look at the Australian dollar. This is somewhat of a newer signal, I think. So maybe we'll see if it's a good idea. So retail traders, this is interesting. Retail traders are actually very much long on Australian dollar. So it's giving us a bearish reading here. If we take a look at the pound USD, so the pound US dollar, 65% are long, so giving us a bearish reading. So my point with showing you guys this is that a lot of times the better examples are usually things like USD CHF. Let's take a look at this one. The better examples are usually the more extreme price action moves, because when the price action gets really extended one way, what you usually find is retail traders are going against the rye. They're going against the flow of traffic, okay? Nick may ask, why do you expect the dollar to sell and gold to buy? Well, in most situations, a weakening dollar strengthens gold. Now, I'll show you this. Let me show you something. If you think about it, think about what I just typed in. XAU versus USD. If the US dollar strengthens, it should hurt the price of gold because gold is more expensive per dollar. And vice versa. Right? It makes sense. It's quoted in dollars, so if the dollar gets stronger, it's going to be more expensive to buy gold, so gold drops, right? I'm sorry. If the dollar weakens, it's going to be strong for gold, and if the dollar strengthens, it's going to be bad for gold. This is not always the case, though. It's not a perfect correlation because, again, we've talked about this with Gary, who was on the show just previously. In a situation where war comes into the picture, like we've had in the Middle East, both gold and the dollar can go up because people flock to risk off assets, which the dollar and gold kind of both fall into. So there are times where they can both move in the same direction, but it's kind of rare. Usually it's not that way. So yeah. By the way, guys, in terms of setups, we'll go back to this page. Still bullish NAS and S&P by proxy through that. Australian dollar, Japanese yen, bullish reading. Let's go look at that. This is what I do every day. When I look for setups, the first thing I do, I go to the top setups page and I see what's giving us a reading. If it's not on here, I'm not usually looking for trades on it because the Edge Finder does so much of the work for me. So I don't have to stare at articles for 4 hours a day to get a general fundamental bias. The Edge Finder is programmed to do a lot of that for me. It looks at economic figures, inflation, labor statistics, and interest rates. So the purpose of the Edge Finder is to kind of help with the automation component of using fundamental analysis, right? If next week we should get a nice shakeup on the inflation tab, right? This whole column is going to really flicker next week because we have CPI numbers, both core and headline, come out for the US next week, and that's going to really shake up the scoring. So I let the Edge Finder do a lot of the thinking for me in terms of economic directional bias, and then I do the price action side, and it makes it so much easier to catch confirmed trades that have a nice fundamental flow to them in combination with a price action setup. That's my sweet spot, and that's how I've caught some pretty great trades this year. If you guys like access, remember 45% off for our Black Friday sale. Don't miss it. It is currently available. If you chat with us in the chat right now, we've got a link to our live chat support center where you can get access to the tool that I use and have built with our team here at A1. Frank and I have been working on this for about 1.5 years together. We built some pretty cool stuff. So if you want a copy, click the link. It'll take you to this direct message center, but just put your name in and ask about the Edge Finder or the VIP group. If you're interested in getting access to our signals as well, you can get access to that. No UJ in the Edge Finder? No, Russ, I know it's not getting a reading right now. Let's go investigate, Russ. What's going on? Where's UJ at? So here's EU giving us a neutral reading. What about UJ? UJ, very neutral reading as well. Getting some bullish, getting some bearish. The labor statistics really changed the directional bias here. You could see we had a labor market. The way you can read that, getting a -4 is basically when comparing the labor statistics in the US versus the labor statistics in Japan, there's a strong preference for a stronger, hotter market in Japan, which is interesting. We've seen a big cool down in the US in the labor statistics side of things. So it'll be interesting to see where that goes. But again, I think, in terms of yen pairs, I'm opening up my horizons a little bit with this Australian dollar, Japanese yen. I am still bearish yen, but it's going to really come down to price action here for me. Like, can I get a setup on this? I like the pullback. Potentially. I tapped in here. Did I miss this again? Dang, guys. I was watching for that. I use market orders to enter my trades, which can be a little bit frustrating sometimes. I don't use limit orders for two main reasons. Number one, I like to kind of reevaluate before taking a trade and then actually be there when the trade starts. That's number one. Number two, I also really like to from a signals standpoint, sharing it with members inside of our Discord. Pending orders are very tricky and confusing for people. As crazy as that may sound, especially newer traders who are like, what is a pending order? And we have to answer that question 500 times a day. It's kind of crazy, but we do get a lot of beginners and beginners have beginner questions and it can be a little confusing. So that we don't do limit orders for that very reason. I also, like I said, I genuinely prefer to market order so that I can understand everything that's going on, then make a decision and be there for it. Australian dollar, Japanese yen, look at that. Really came down to my level and I just missed it. Ivan's in this trade. He's caught this really well. I think he did it in the Discord as well. SPY, I'm still long. Letting this one, not DPY. I don't even know what that is. SPY, still long. Game plan, as I mentioned earlier, holding unless support breaks. If support breaks in the next few hours, I will be out for this trade, and that'll probably be like a $8,000 profit, somewhere in that range. We're floating around $9,700 at this time. So we'll see if that, we'll see if that can hold. The reason I've tightened my stop up is, guys, we're still sitting at resistance. And you have to respect resistance for what it is, right? It is resistance after all. However, just because we're sitting at resistance does not mean price cannot break out. I think we've got nice momentum. Momentum to the upside does not mean resistance just kills momentum instantly. Sometimes it does. Sometimes a really, like a higher time frame, really strong level can do that. But I think you've got a potential reversal forming on the S&P. And so I've really watched that pretty close. See where gold is at now. Gold trying to push higher here. Came down to 1945, found support. Look at this, barely even, like that is such a shallow retracement before shooting right back up. As I mentioned, I think a path of least resistance here for gold is still a little bit higher of a squeeze up to that 1970 mark. We'll see if gold can get there. Again, today, likely to see some volatility. Jerome Powell is set to have something to say. He's just for heads up, he's in a panel discussion, which is titled "Monetary Challenges in a Global Economy." Sounds like a novel, right? Sounds like a movie that's coming out. The monetary challenges in a global economy. But he's coming out. He's coming in. What is that? About 20 minutes. Should hear from him. Him and I think a panel. So we'll hear from some of his powerful official friends. And I believe, audience questions are expected. That's usually, if there's any push, guys, on monetary policy in the audience, that's what's going to cause the market stir. So you might have some sort of like thing prepped. I'm not sure if he's speaking, or if he's simply going to be answering questions, but we'll kind of see. It's a panel discussion. I guess we'll see. We've got Frank here in the audience, or in the back. I'd love to poke him on what he's looking at here today. We've talked all about gold, the dollar, S&P. Actually, Frank, what's up? How's it going?
Hey, what's up?
Hey, I trailed finally on my S&P. Have you trailed also?
I have. I trailed at the beginning of the week and never moved it. It's at the same spot you got yours at.
We trade too close, Frank. We gotta
Yeah.
No, it's all right. I mean, honestly,
I tried going out and branching out on some trades, and I got stopped out on AU. I was trying to long that, and then it stopped me out, and then immediately bounced back up. But
that happens. That happens for sure.
I'm just happy that the trade on the indices are going well, because that's really carrying everything for me right now.
Yeah, same here. I mean, it is really, really cool how like one good trade can really change a lot of stuff. I had like a horrible losing streak before this, and it's like one trade. I mean, it hasn't it's definitely made a significant improvement from where it was, which is awesome. So I guess with this upcoming discussion, Frank, I was trying to figure out like what is going to happen. Like, what is it? And it doesn't seem like a prepared speech. It seems just like a panel, like a discussion kind of thing, which Gary made the point that it could be here or there. It could be a significant market mover. It could be a minimal market mover. But I guess, what are you looking for? Would you be interested in trading the Aussie dollar again, or any of the dollar crosses today?
Yeah, I would be looking at risk on pairs like I have been all week, but nothing is really doing anything yet. We see pops like this. This is a very good example of uncertain markets. Pop higher only to break lower, almost forming this trend line sort of deal here, where price just goes back and forth, and it's all because Powell's about to speak. So until we hear something, once this whole meeting is over, I think it'll be time to look for some trades. But again, I don't think this discussion panel is going to really go anywhere in terms of hawkishness, because what he said in the statement on the FOMC statement was very not hawkish at all. So we saw a bunch of just, you know, confidence in the economy, and then confidence that inflation is going to kind of stumble and not really uh, push any higher, and wage growth stayed the same, beating expectations. So I'm not seeing any sort of conflict here on the monetary side. I think Powell's just going to answer it like he always does, and that's going to be that. And then the market will decide, is it a buy or sell? But I think honestly we're just going to see his regular talks on, it depends on the data, depends on this. We're just going week to week looking at all the different sort of analytics that come through. So
Yeah.
I'm still bullish on the indices. I don't really, I take this this move up and down with a grain of salt. So we'll see.
Yeah, that's fair. And I think, Frank, to your point about Jerome Powell, or just any person that gets asked this question, I think you probably would think that in their position, they're like kind of trying to stay vague, because they really don't want to try and release information unless it's time where they kind of have to, which is what, probably anybody would do. You don't want to like give away kind of what you're not sure about just yet. Like if you're planning something, or you're thinking about something, or active conversations are happening, you don't want to like just disclose that to the world. So there will probably be that defensive, but with the possibility of questions, there's always that chance, though Jerome Powell is very calculated in his responses. There is that chance that something kind of slips out that moves the market. So we'll stay attentive to anything that happens there. And then I guess, Frank, too, next week we have CPI, and CPI is probably the final like confirmation, I think, to what we saw last week, which was, as you mentioned, a less hawkish sounding Jerome Powell, a Fed, and also NFP, which showed cooling jobs numbers. I guess CPI will be the final kind of number to confirm or deny that concept. I guess one thing I would say about this panel is that if Jerome Powell kind of sounds like, if he sounds confirming of what he said last week and with the jobs numbers, if he sounds like, yeah, this is looking okay, like any confirmation of that cooling sound, as you mentioned, that would be in some ways also potentially bullish for stocks, bullish for gold, and could cause the dollar to give back some further gains. But outside of emerging market or of currency crosses for the dollar, what do you think about gold? Gold has been interesting.
Yeah, I'm still not quite sure on gold yet, because earlier in the week we saw this head and shoulders pattern, and I wasn't too confident in a long play, and then sure enough it came lower, but now it's up again as the yields are up, which is very confusing to me. And if I don't really like have a clear bias of where I think something's going, I kind of just stay away from it.
I think that's smart.
I wish I shorted gold at the beginning of the week, but I mean, now it's kind of in no man's land. It went under support and closed underneath it, and now for some reason it's back up today. I think gold is still weak. I don't really see much of a clear upside, but Powell's going to talk, and it's going to move everything. And and whether it's good or bad, like the indices, dollar pairs, gold, everything's just going to go crazy. So probably not the best time to be entering.
Yep, I think you're right. I mean, it has that potential, that question mark for the bearish.
Yeah.
Sorry, I think we were delayed a little bit there. I also want to follow up with what James shared with us on the Telegram earlier on. We put out some polls. And by the way, if you guys are not already in the Telegram, Chandler, if you would just drop the link for us again. We put out a poll on Telegram. Let me see if I can get this to show up here. We put a poll on Telegram. Powell's up next. Is this speech going to have a more hawkish or dovish tone? I'm more in the dovish. Well, I guess it's less hawkish, but look how close this vote is. 51-49. If you guys are in the Telegram, make sure to vote. Let's get some final poll results here. We put out this morning. Let us know. If you're not in the Telegram, we just dropped the link to join in the chat. We've had a bunch of people join. And just a heads up, Frank and I are putting in a lot of work over on the Telegram. You can see we do like these detailed articles or detailed posts each and every day. And these are free. I mean, this is free stuff. Frank and I and Julie helps us manage this every day. So if you're not already in there, make sure to join and also vote on the polls. We need your votes. Look at how divided this is. We have 2 back-to-back like split decision votes. But Frank, I think you and are you. I'm thinking he's going to sound confirming of what he was last week. But I guess there's always that chance of hawkishness. But again, I think he's going to be confirming in his speech. But what do you think?
Well, nothing has come out for him to change his mind otherwise. If he was dovish last week, nothing has changed since then to really impact, all of a sudden we're going to flip hawkish again. I don't think he's going to talk about hiking rates again. He hasn't been. He just says he leaves the door open for it. And I guess what people are worried about is that in previous statements, like back in the summer and even early in the year, he was talking about one more hike in the fourth quarter to, sort of curb inflation and then see where things go. And we haven't seen that yet. And as we can see, inflation is just coming down. Core CPI, retail sales, everything's declining, and it's not very likely that you'll hear him say, "Okay, we're going to switch gears and hike." But I think everyone has it in the back of their mind that, well, December is the last month we can do this, and so we didn't see anything in the last couple FOMC meetings, so maybe this is the time where we get a hike. But either way, I don't think that he's going to mention, doing that just because of where we're at with the data and everything. So,
Frank, I wanna ask you. This is more exciting because what we've just talked about together has kind of been the latest, right? We've been on this topic of, okay, seems like the Fed is done for the foreseeable future, and inflation seems to be headed in the right direction. But next up, this is fun for me because when you look at the markets, there's always a bull and bear case. And I think, Frank, what we're about to start seeing on the narrative is the bears that refuse to believe that prices continue to go higher. Here's what I'm thinking. The next line of defense for the bears, and I'm not saying this like make fun of this thought process, but the next thing the bears I think are going to start saying is, okay, yeah, you're going to get inflation moving in the right direction, but what you're not ready for is inflation is going to plummet and the economy is going to enter into a recession. And so I think like the next debate for us on this show and in markets in general, I think is going to be, now people are going to think the Fed has just done so much that it's going to crash the economy. I think that's our next debate. Do you think that's kind of coming up next? Because I think the inflation story is like in the right direction, but now it's like, is it in the right direction or is it into recession direction? You know what I mean?
Yeah, I don't think it's in recession direction, just because it's been a slow and steady decline over time, and there's still worries of it going higher. I don't really think that on that side it's going to affect much in the markets, just because we priced in the interest rate hikes already. We priced in, how tough inflation was last year. But I guess what could be happening right now is, we got a war going on in the Middle East, and we've had a war going on in Russia and Ukraine. So just I think it's geopolitical tensions too are adding to the uncertainty, and then we also had earnings roll out. It's on top of what the Fed is saying. I think what is more concerning are those factors, despite monetary policy. Um, so that is something to consider, but I don't think that inflation is going to plummet anytime soon. And
Yeah, it should be interesting to see. Frank, I don't mean to cut you off, but we do have a guest here that you can say hello to as well, because you know him. It's Jason Webb. So we'll bring in Jason Webb here for a minute and say hello
hey,
to him. He had some
Jason,
technical difficulties.
How's it
but
going,
hey,
Nick and
Jason,
Frank?
doing
it
well.
going?
How are you?
I'm doing good.
how's it been going? We saw you. Well, I know you came on and did a little interview with Chandler last week when we did the ginormous 8-hour
Yeah.
stream. What's been going on? And I guess we're on a little bit of a time crunch. So in terms of prepping for this upcoming news, what's been going on? What have you been trading? And what's your thoughts right now?
Yeah, so first off, sorry I'm late. I had some technical difficulties.
All
But
good.
more recently, I've just been trading. I just opened a Discord channel just to have some fellow traders join. It's in my YouTube bio if anyone wants to join that. But I've just more been looking at the indices recently. I'm currently in a NASDAQ trade. So the news coming out of Powell, whatever he says, is going to be very important for that trade. But that's the only one I've been trading. I've been backing off a lot from the pairs that are not the dollar, but I've been really into the indices.
Cool. Yeah, the indices they can love you or they can hate you, and
Yeah.
you know they're pretty volatile, but again they can create some really good risk to reward. What do you think of Nasdaq? Are you bullish? Are you
Yeah,
thinking it's
so
overdone? What do you think?
I'm currently in a long trade. I opened at around 1,500, 15,000. My apologies. And I'm really just trailing my stop. I was able to trail once at 15,150, and I'm letting it roll past the Powell speaking today.
Very cool.
That's currently my only trade that's open, but more opportunities could present themselves.
That's awesome.
He speaks.
So let me ask you this: you're an EDGEFINDER user? Did you
Yes.
what did you see? What did you like on the EDGEFINDER for the Nasdaq?
Yeah, so really my deciding factor between the NASDAQ and SPY was just kind of the COT data. It looks like the big banks are just a little bit more long towards the NASDAQ. So that was my primary catalyst to go into the NASDAQ.
Yeah,
but
that's fair.
either one of them really kind of trend the same direction. I mean, rarely you'll see them go opposite ways, but
yeah, no, that's true. And I think the NASDAQ, to your point, for those of you guys who are not sure exactly what we just referenced, Jason pointed out, you've got the NASDAQ in here as well as the S&P 500. And the S&P 500 saw just like a mild decline in the last filing, but then you've got NAS, which had a nice kind of increase in bullishness in the last filing. And so, understanding that is basically a flow of big money kind of moving in on the NASDAQ. So that's really cool. So
yeah, more recently,
Jason, in terms of, yeah, go ahead.
Yeah, recently I just was kind of kicking myself yesterday or 2 days ago about this gold trade that presented itself. It was an EDGEFINDER trade around 1945. Gold is very long on the EDGEFINDER. With the COT data and the banks, but more specifically just all the economic factors. And it just recently had a little spike. We're now at 1962. We'll see with all the uncertainty coming into the market, especially with the wars in the Middle East. I really wish I would have got it in there, but we'll see what opportunities come up in the next week or so.
Yeah, that's awesome. Yeah, I think when you look at gold, again, you've got this support level 1945 on the button, by the way. It just hit that 1945 and just jumped from there. I'm feeling the same way. I was like trying to be really patient with it. Frank and I, we were looking at it early on this week. Frank at least talked me out of being bullish up here. I was looking at it. I was like, oh, you know what? It's coming back to support. But Frank was like, look at the daily, a little bit of a head and shoulders there. And I was like, you know what? Let me just wait. And it did come down. But of course, I missed the rebound here that's going on. And to your point about, again, COT, you got gold pretty bullish in the latest filing, and overall pretty long overall on institutional side of stuff. So interesting moves there.
Yeah, I had my
board.
alerts
And yeah,
on, and I just missed it.
yeah, that's the worst, is when it's like you had the right idea and you just didn't quite catch it. I thought it would squeeze a little bit lower down to this 38.2, so that was why I didn't enter. I liked that support zone, but who knows? You know what? It might give us a pullback after. I will say for gold. The cool thing, Jason, is, and for Frank too, for both of us, if you get these breakouts, there's nothing wrong with not catching the bottom, right? So if we get like a huge push on gold and the dollar comes tumbling down and something Jerome Powell says gets us moving there, there's possibility, that chance that, by the way, this would probably, Frank, you think that turns into a bullish trend on the EDGEFINDER from the trend reading if we get like a pop there?
It would if that happened, yes. In the short term, at least, it would flip the trend from. I guess we go from -2 to +2 on the trend reading. So what we saw in the past month was not very good, but now we've seen this sort of flip. So the trend is pretty powerful.
My next target for gold would be about 1970, but if we can't get that, around 1930 for a farther pullback into the zone to around 1935.
I like it, Jason. It's, honestly, Jason, it's so cool to see from listening to your interview and to have you here now, just from where we were back in April when we did that event with Oanda. You've come a long way and from where you were there, and it's just been awesome to see. From Frank and I's perspective, we pound our head against the table every day building the tools that we do, and it's just really kind of rewarding for us to like see people who are going off and doing big things and getting funded and making progress from just kind of a satisfaction standpoint. It's really cool just to see. So I'm glad that you've gone on and done so much and so well for yourself.
Thank you, and I appreciate you guys. But the Powell's about to start speaking, so looks like we got to get into that. Looks like I'm probably going to hop off, but I appreciate you guys having me on.
Yep, no problem. And Jason, again, hopefully we can get you back. We can get you on a regular basis if you'd like. We'll get you next time. We'll figure out the technical side a little bit more, and then we can get you some charts and setups, because I'm sure, from the viewer's perspective, it's cool to just get people who are up and coming and maybe a different style than just what Frank and I talk about over and over. So thanks for coming on. I appreciate you being here. And last thing, we do have your channel. So anybody who would like to check out Jason, again, Web Trades on YouTube, we just dropped his link to his channel in the chat. And Jason, again, I want to thank you and congratulations on all your success, man.
All righty. Thank you for having me on.
See you, Jason.
Thanks, Jason.
All right. That's just cool, Frank. I mean, come on. Isn't that just like exciting to see?
It is very cool, especially, he uses like the tool we built, which is just something like, it's one thing to, build something, but then know that like lots of people and then lots of successful people, including Jason, are using it. I believe Jason recently got funded. I passed his trial account, so now he's a full-fledged trader on the funding side. So congrats to him, and it's just cool that he's been using the EDGEFINDER to do his analysis and help him out, find setups.
I always equate it, Frank, to like how a songwriter feels like just an immense feeling of joy when people like know their songs and sing their songs. It's kind of a nerdier data geek way of thinking it, but it's so cool that people use our data. You know what I mean?
It is. It's rewarding to hear that. But I also, if you look at the dollar, there's something I just noticed.
Okay, what you got?
So not a lot of movement yet, but Yesterday's candle hit what was resistance and came all the way back from that, basically stopped at like break even on the day, but showing a little bit of like reversion potential. If you go to the daily chart, this is at least on TradingView, that's what it's saying. It shows this sort of rejection, and today's been kind of nothing but upwards. So
Yep.
it is something to consider. Like, okay, well, maybe trend is still moving to the upside, but watching this, just seeing if price can't break that previous high, I think the dollar's not looking very strong still.
Yeah, we'll have to watch this again. This daily chart candle, guys. Keep a very close eye on that. And also, I think Chandler's got the speech here for us, or for the presentation. There's 955 of you guys here. I just want to say thank you for being here. Subscribe if you're new. And Chandler, if we've got something of substance, you can pop it up on the screen for us.
Additional shocks as well: a war on the European continent, an energy crisis, rising trade, geopolitical tensions, and of course, in response to this surge in inflation, central banks in many places have tightened monetary policy, also to an unprecedented degree in a long time, including in the US, but in many other places as well. Now, the good news is inflation is...
Frank, I'm going to run to the restroom. I'll be right back. I got to pee so bad.
Quite high and above desired levels, and many central banks now appear to be near or at the peak of their hiking cycles, so they're communicated about that. So while we're not home yet, is an important time to take stock. And this panel will aim to shed some light on the trade-offs and the challenges that policymakers face today. Has the monetary policy response been sufficient? Has it been effective? What can we say about spillovers? And more broadly, is the central bank toolkit fit for the task at the current juncture? Now, to help us think about some of these very complicated issues, we have a really phenomenal panel today. I really cannot think of a set of people who would be more qualified to share their views on these questions. So I'm going to introduce them briefly in the order in which they will speak. We'll start first with Jay Powell. We're very fortunate to have Jay with us. Jay is chairman of the Federal Reserve System since 2018. Arguably, many would say the most powerful policymaker in the world. He's served as a member of the Board of Governors since 2012.
The audio is bad.
Prior to the Federal Reserve Board, Jay worked in investment banking. He also served as Undersecretary of Treasury for Domestic Finance in a George W. Bush, H. Bush administration. Amir Yaron has been governor of the Bank of Israel since 2018. That is for almost as long as Jay's tenure as chairman of the Fed. Before that, Amir was professor of banking and finance at the Wharton School of Business at the University of Pennsylvania. And he's a world-renowned expert in macroeconomics, monetary economics, finance, and financial economics. And we're particularly delighted to have Amir with us today. Gita Gopinath requires no introductions, I think, especially in these walls. But she is the first deputy managing director of the International Monetary Fund. Previously, Gita had chief economist in the research department. And prior to joining the IMF, she was the John Swanstra Professor of International Studies and of Economics at Harvard Universities, with a world-class record of research on exchange rates, trade and investment, international financial crisis, monetary policy, debt, emerging market crisis, a very, very long and distinguished list. And then last but obviously not least, Ken Rogoff. Ken is the motivation for this year's annual research conference in his honor. And we're very happy to have him today and tomorrow. And currently, the Moritz Boas Professor at Harvard University, also a former chief economist at the IMF in 2001, 2003. Another turbulent time for the global economy. Ken has written several extremely influential books, and of course, many research articles on debt and financial crisis, He has written what remains to this day a reference textbook, graduate textbook in international macroeconomics with Ken Rogoff in 1996. He's known for, with Maury Upsfeld in 1996, is known for his pioneering work on exchange rates, central bank independence, sovereign debt, financial crisis, among many other topics. And Ken has long ranked among the most cited economists. I checked quickly, and I think his REPEC ranking, which is something
AU is just
us academics or former academics, we check carefully very
Yeah,
often.
what's going
I
on
think his
there?
REPEC ranking is number 11, which is totally astonishing. And his Google Scholar count is
Nothing is happening
off the
yet.
charts, astronomical. And for those of you who don't know, I have to all mention this, Ken is also an international chess grandmaster. Now,
Oh, chess grandmaster.
Frank, we'll come back to the we'll Chandler and James will monitor in case anything really picks up there. But I wanted to get a reaction to the price. You mentioned euro dollar moving. Did anything even? I was trying to listen, while I was peeing, and nothing really seemed to be said, and yet the markets moved like crazy. Did you catch anything that I missed?
No, there was really nothing. It just started and then everything tanked. So
They
this
start talking about
this to me is
chess and
just
boom.
noise. Yeah,
Okay.
there's nothing going on yet, and yeah, I think the initial sell-off is just because no one wants to be in for this, I guess. But
Did I get stopped
I
out
don't
of
know.
S&P? Oh, I'm very close. I think I might get stopped out of S&P pretty soon if it doesn't find support here. It's that decision point for me, Frank. I guess for you too, right?
A member of the Fed family.
Yeah. Oh, he's here.
So
Here's
my
JP.
assigned topic is
JP.
U.S. monetary policy in the current global inflation episode. So I'll begin by briefly addressing the U.S. outlook, and then I'll turn to three broader questions raised by the historic events of the pandemic era. So to begin, U.S. inflation has come down over the past year, but remains well above our 2% target. My colleagues and I are, of course, gratified by this progress, but we expect that the process of getting inflation sustainably down to 2% has a long way to go. The labor market remains tight, although improvements in labor supply and a gradual easing in demand continue to move it into better balance. GDP growth in the third quarter was quite strong, but like most forecasters, we expect growth to moderate in coming quarters. Of course.
Just got people walking right by him. Oh no!
Okay.
What is
Thank
going
you.
on?
Thank you very much. Thank you very much.
Yep.
It's a
Thank you.
protest. This happened last
Just close the
time.
fucking door. Close the door.
What? Wait. Did you hear that?
Did he just say close the effing door?
I think so. Oh my gosh. Well, they got Mark Zuckerberg on the screen now on the right.
Yeah.
That's got to be Mark.
You can't say that on a live stream.
This isn't real, man. This isn't real. That's crazy. Holy crap. What just happened?
What just happened?
Like a bunch of people randomly just
Yeah,
jumped
there
on
was
and then
definitely
close the effing door gets said. What is happening?
there's definitely an F-bomb in there.
Frank, what if
I
this would be
think
so
I think
funny.
Powell has had it.
What if right in this moment, Frank, you just saw this huge spike up? Like the second that happened, it just goes viral high.
What if he comes back to the podium and he's like, "All right, I'm done with this. I'm printing as much money as I can. I don't care what you guys do to me." That would be pretty cool for us, at least.
Frank, people are saying in the audience that JP said close the effing door.
Yes, he did.
He did? Yo!
Yes, he did.
JP is not messing around.
No,
Holy
he's
crap.
had
I thought
it.
it was like somebody else.
Uh-uh.
Oh my.
That
Okay,
was
you know,
JP for sure.
to be completely honest, that would make me so mad too. Imagine you like prepare meeting notes, like you've done this all day long, you're stressed out of your mind, like you have the whole world watching you, and just like every time you get up to speak, like protesters just come up and it's like, look, I'm just doing my job, man. Just let me do my job.
I know he instantly regretted that. He was like, his face was still in the mic.
Oh my gosh. I'm sure that'll
Oh,
be
no.
back pretty soon, guys, but that was insane. I mean, I've never seen that before from a Fed situation like this.
Yeah.
How do these people get in there?
What does that mean though? Like in terms of having like that as your job, what does that mean for him? Is he gonna have to pay like a fine, like how NFL players do or whatever?
I have no idea. I just don't even know. Like that just seemed fake when it was happening. I was like, what? And then the camera cuts off. What just happened, man? That is crazy. Well, we got Chandler and James on the case, guys. If that comes back into play, we'll have it back on the screen for you. This seems like just the world is fake right now because that's so crazy. You know, that happened recently. For those of you guys who didn't catch it's I guess it's like a trend, but come on, all of us traders and investors, we got it hard enough. Can we just get the information out of there? You know what I mean? Like just do your protesting outside of this one specific time. Look at this. S&P is still sitting at
and I don't know what JP can even do about that. If it was climate protests, that's not his that's not his responsibility either. That's like for the politicians. So whatever.
Well, whoever was on the camera did really a quick job there getting it off camera like immediately. So I guess I don't even know what they were protesting. So I guess they didn't have what they were looking for, I guess. Was Trump entering the room? Someone asked. Who knows? Definitely staged back-to-back meetings. You got to be certified to get in. Definitely staged. Man, I don't know. That's some. You got any tinfoil hats for me, Frank? I need a tinfoil hat for that one. I don't know. Anyways, in terms of markets, we're still we're seeing price sitting at support here. S&P has not made too much a move. Gold, we saw across the board. The dollar was strong. Did it do anything to gold? Oh, I think we're back. Chandler's. Do we have some commentary on
today?
That?
Okay, so monetary policy challenges for the global economy. Thank you.
Welcome back. Let's start again.
And
that was wild.
No, I don't. Hold on. Let me check. We might have to go too.
Wait, where is JP?
Yeah, I think he's fighting climate change now.
Dang.
Oh, he's back? After he closed the upper
I'm
door,
so
he's back.
confused. I've never seen this in my life. What is this?
No, don't worry about it.
It's not real. Frank. Nothing's real. Matrix.
Okay, where was I? Inflation was coming down.
I think you said
the labor
close
market
the
remains
effing
tight,
door.
although improvements in labor supply and a gradual easing in demand continue to move it into better balance. GDP growth in the third quarter was quite strong, but like most forecasters, we do expect growth to moderate in coming quarters. Of course, that remains to be seen, and we are attentive to the risk that stronger growth could undermine further progress in restoring balance to the labor market and in bringing inflation down, which could warrant a response from monetary policy. The FOMC is committed to achieving a stance of monetary policy that is sufficiently restrictive to bring inflation down to 2% over time. We are not confident that we've achieved such a stance. We know that ongoing progress toward our 2% goal is not assured. Inflation has given us a few head fakes along the way. If it becomes appropriate to tighten policy further, we will not hesitate to do so. We will continue to move carefully, however, allowing us to address both the risk of being misled by a few good months of data and the risk of over-tightening. We're making decisions meeting by meeting based on the totality of the incoming data and their implications for the outlook for economic activity, inflation as well as the balance of risks. as we determine the extent of additional policy firming that may be appropriate to return inflation to 2% over time. And we'll keep at it until the job is done. So with that, let me turn to the three questions that I've posed that have arisen from the receding but still elevated inflation we're experiencing today. The first question is, with the benefit of 2.5 years to look back, what we can say about the initial causes and ongoing policy implications of the current inflation. After running below our 2% target over the first year of the pandemic, core PCE inflation rose sharply in March 21. Economic forecasters generally did not see this coming, as shown by the February 21 survey of professional forecasters, which showed core PCE running at or below target over the subsequent 3 years. So the real-time policy questions for policymakers were what caused the high inflation and how policy should react. And at the outset, many forecasters and analysts, including FOMC participants, viewed the sudden upturn in inflation as mostly a function of pandemic-related shifts in the composition of demand, a disruption of supply chains, and a sharp decline in labor supply. The resulting supply and demand imbalances led to large increases in the prices of a range of items most directly affected by the pandemic, especially goods. In this view, as the pandemic abated, our dynamic and flexible economy was likely to adapt fairly quickly. Supply disruptions and shortages would diminish, labor supply would rebound, aided by the arrival of vaccines and the reopening of schools, elevated demand for goods would shift back to services, inflation would ease reasonably quickly without the need for significant policy response. Indeed, although monthly core PCE inflation spiked in March and April of 21, beginning in May, it declined for 5 consecutive months, providing some support for this view. But, of course, in the fourth quarter of 21, the data clearly changed amid waves of new COVID-19 variants, with only gradual process in restoring global supply chains and relatively few workers rejoining the labor force. That lack of progress, combined with very strong demand from households, contributed to a tight economy and a historically tight labor market, and more persistent high inflation. The committee signaled a change in our policy approach and financial conditions began to tighten. Of course, a new shock arrived in February of 22 when Russia invaded Ukraine, driving up prices of energy and other commodity prices. By the time we lifted off in March, it was clear that bringing down inflation would depend both on the unwinding of the unprecedented pandemic-related demand and supply distortions and on our tightening of monetary policy, which would slow the growth of aggregate demand, allow supply time to catch up. Today, these two processes are working together to bring inflation down. The FOMC has raised the federal funds rate target by 5.25 percentage points, and we've reduced our securities holdings by more than $1 trillion. Monetary policy is in restrictive territory and putting downward pressure on demand and inflation. The unwinding of pandemic-related supply and demand distortions is playing an important role in the decline in inflation. For example, wage growth has steadily fallen since mid-2022 by most measures, despite continued robust job gains, reflecting a resurgence in labor supply, thanks both to higher labor force participation and a return of immigration to pre-pandemic levels. While the broader supply recovery continues, it's not clear how much more will be achieved by additional supply-side improvements. Going forward, it may be that a greater share of the progress in reducing inflation will have to come from tight monetary policy, restraining the growth of aggregate demand. Turning then to my second question. For many years, it has generally been thought that monetary policy should limit its response to or look through supply shocks to the extent that they are expected to be temporary and idiosyncratic. Many argue as well that in the future, supply disruptions are likely to be more frequent or more persistent than in the decades just before the pandemic. A second question then is what we've learned about this standard looking through approach. The idea that the response to the inflationary effects of supply shocks should be attenuated arises in part from the trade-off presented by those shocks. Supply shocks tend to move prices and employment in opposite directions, whereas monetary policy pushes each in the same direction. Therefore, the response of monetary policy to higher prices stemming from an adverse supply shock should be attenuated because it would otherwise amplify the unwanted decline in employment. In addition, supply shocks have most frequently most frequently come from the volatile food and energy categories, and they've passed through quickly. While food and energy prices critically affect the budgets of households and businesses, the policy tools of central banks work more slowly than commodity markets move. So responding aggressively to quickly passing price increases could exacerbate macroeconomic volatility without supporting price stability. Our experience since 2020 highlights some limits of this thinking. To begin with, it can be challenging to disentangle supply shocks from demand shocks in real time, and also to determine how long either will persist, particularly in the extraordinary circumstances of the past 3 years. Supply shocks that have a persistent effect on potential output could call for restrictive policy to better align aggregate demand with the suppressed level of aggregate supply. The sequence of shocks to global supply chains experienced from 2020 to 22 suppressed output for a considerable time and actually may have persistently altered global supply dynamics. Such a sequence calls on policymakers to use policy restraint to limit inflationary effects. Policy restraint in this case is also good risk management. Supply shocks that drive inflation high enough for long enough can affect the longer-term inflation expectations of households and businesses. Monetary policy must forthrightly address any risks of a potential de-anchoring of inflation expectations, as well-anchored expectations help bring inflation back to our target. The sharp policy tightening during 2022 likely contributed to keeping inflation expectations well anchored. My third question, then, is the level where interest rates will settle once the effects of the pandemic are truly behind us. By 2019, the general level of nominal interest rates had declined steadily over several decades. As the pandemic arrived, many advanced economies had below target inflation and low or mildly negative rates, raising difficult questions about the efficacy of interest rate policy when constrained by the effective lower bound, or the ELB, as we call it. Over 2 decades, an extensive literature had identified a number of possible changes to the widely used inflation targeting regime, including negative policy rates, nominal income targeting, and various forms of makeup strategies, under which persistent shortfalls in inflation would be followed by a period of inflation running moderately above 2%. Today, inflation and policy rates are elevated, and the effective lower bound is not currently relevant for our policy decisions. But it's far too soon to say whether the monetary policy challenges of the ELB will ultimately turn out to be a thing of the past. The prolonged proximity of interest rates to the ELB was at the heart of the monetary policy review and the changes we made to our framework in 2020. We will begin our next 5-year review in the latter half of 2024 and announce the results about a year later. Among the questions we will consider is the degree to which the structural features of the economy that led to low interest rates in the pre-pandemic period will persist. With time, we will continue to learn from the experience of the past few years and what implications it may hold for monetary policy. These are just 3 of the many questions raised by these challenging times, and of course, we're very far from a complete understanding of the answers. Again, it's great to be here today, and I look forward to our conversation. Thank you.
So I didn't
Thank
hear
you.
anything
Thank
out
you
of the
very much, Jay. And I think we're really off to an excellent start.
I just muted the stream for just a second. I didn't really catch anything incredibly dovish or hawkish there, Frank, but I imagine perhaps we're about to get some questions from the audience that could be a little bit more triggering. I know some people are already leaving the stream. Guys, don't go anywhere. He's about to, the important part is usually when he has less time to prepare a speech and has more questions that are on the spot. So let's see if we get anything from him here.
It's yours.
I'm like an AU right now.
All right. First, it's a pleasure to be here in a conference in honor of Ken Rogoff. We all cherish and follow his distinguished contribution in academia and practice. Sort of in a sharp turn, as we're all aware, Israel is currently at a war following the October 7th inhuman brutal attack by the terrorist organization of Hamas. This is a crucial time for Israel's security, and we thank all those who support us. Our hearts are with the innocent victims of the war, and our hope is for it to end with a safe return of hostages and with peace and security. And now I'm going to turn now. I want to turn now to address the issues and questions presented for this session. An important question is, to what extent can a small open economy like Israel, or for that matter, any SOE, conduct its monetary policy independently, or should it rather follow the steps of the major economies? Another question is, what are the spillovers from the policy taken by the major economies to small open economies, and how do those impact local conditions? The answer to these questions depends on the development of the economy, its specific areas of exposure to the global economy, and the particular shock.
Frank, I'm just going to cut him off for a second here. If we'll keep the stream rolling in the background. James and Chandler, if anything comes up of interest, of course, not to say that that's not of interest, but I think the big stuff is going to be anything that's U.S. related specifically. And so right now we've got S&P 500, Frank, pulling back, but it's decision time. If it wasn't before we started the stream, it definitely is here. We're sitting at a support level. And I think for audience members who are just joining us, we had a bunch of people join during this event. Frank and I are both long S&P 500. I've got this trade open from last week. We're still sitting in it, and we're sitting at support levels. If this level does break, we'll be trailed out. Frank and I both have this trade open. I will be trailed out right around here if we break through support. I think Frank is the same. If we do rally here, that would be a nice decision point. But again, I think if you're watching S&P right now, guys, this is very pivotal spots for technical analysis here as we get to the speech. Frank, what do you think? Any reactions so far that you've noted? And I guess which charts are you watching right now?
The only reactions were all the sell-offs on the S&P and risk-on pairs that are pertaining to the dollar. I'm still looking at AU. This is a pretty good support level that it's rested upon. If it can, do the same thing as the S&P here, which it usually does, if we don't break below and continue lower, I think right here is a pretty good zone to look for a long trade. In my opinion, whether or not I take the trade will depend on where it goes, but this is the 4-hour time frame, so we're gonna have to see rejection here before I start looking at potential reversal.
Yeah, I think that's fair. I think when you look at the dollar pairs, they dropped like immediately. It was kind of weird, and maybe there's something that we're missing, Frank, because it was like nothing had even been said, and everything dropped immediately. Euro dropped, etc. I know some people in the audience were asking about gold, which did have a pretty quick drop there, but still, you look at the 4-hour chart here. I think that you still kind of have this intact idea of, okay, here's a downtrend. You've got this kind of breakout here. Any signs of dollar weakness could get gold, I think, to make a move up to 1970, as Jason pointed out for us earlier. And a nice little change in momentum off of the lows. We'll see if that holds. We put that notification in the chat a few minutes ago, but in case you guys are interested in getting access to the trades Frank and I do end up taking, you can always get notifications directly in our Discord channel. If you're not already in there and you'd like to join, please message us and we'll give you pricing options on what that costs to join. It is a one-time fee to join, and it is currently 45% off during our Black Friday sale. So don't miss out. If you've been thinking about joining, message in. Someone from our team will get you hooked up on that. And again, we're not showing the stream right now because there is kind of another conversation going on. But if something does pick back up, we'll have it back on the screen here for us. Frank, I'll if you would like to step away, take a break, I can keep going without you. I know we might not get Jerome Powell back on right away, but if he does, I'm sure you can join back in. But for now,
I can do whatever. If you want to take it solo, that's fine. But I'm free if you want me on.
Okay. And I guess in that case, we'll let you stay for a little bit longer. I just want to see I'm not exactly sure what the structure of this is. If we do get a discussion, I definitely think it's worth listening to, but we'll see, I guess. We'll keep around for a few minutes here. In terms of gold, what I'm seeing on the price action standpoint, guys, is we, again, look at the technicals here. Big hold at 1945, pop to the upside, now pulling back. There could be a little bit of room to push up. And I think going off your idea, Frank, with, Aussie dollar, euro dollar, pound dollar, these things are all giving back some of their gains here, but that very well could just be a pullback. Same thing with the S&P. I know we keep talking about it because obviously we're a little biased because we have trades open on it. But I'm comfortable in this S&P trade. But again, this is very, very, decision-making time. As I mentioned, you've got this level of support. If it holds, Frank and I will both be in our positions and stay in our positions, but we trail stops. That's kind of our methodology. And inside of our signals group, you'll be able to see anytime we trail stops, et cetera. I trailed a stop just before this big event. Stops are just below this. If price breaks lower, I'm out. We'll take profits on this. We entered this last week, so S&P has been a really good runner for us, but it's time to prove it, right? We're sitting at a resistance point on the 4-hour, and we'll see if this can properly break out. Frank, do you want to take the US dollar for a second? If you take the dollar index, I'm curious to see what you see there.
So even on top of that too, I'll go back to the S&P in a second, but they're in this range where saw a huge run up, and now it's somewhat of a stall, and between support and resistance, just a lot of back and forth, and it is because of like what's happening today, and it might break under, stall, it might break above and stall again, waiting on CPI news. So this isn't too concerning for me. If we stop out, we stop out. We made profit, we're happy, but ultimately going to look for more long trades in the future. I have the dollar index pulled up on my computer though. That's something I wanted to highlight. Similar concept to the indices, making higher highs and shooting lower to form a lower low. The dollar is doing just about the same thing on the 4-hour. So this huge green candle we see on the 4-hour is just responding to this lower low on the 4-hour time frame. So if we do see the move complete up to that trend line, it's not a guarantee that a higher high means we're going to bust higher. But I think what this is doing right now is just steady back and forth with greater volatility until this sort of thing subsides. So maybe we'll see it come up here, retest these highs, and then turn right lower again. So I think is Powell talking?
I think no, he's not. We've got I'm sure Chandler James will throw it up if that changes, but I can see he is currently not speaking. There's the other gentleman who is still going on. So if we do get panel discussion or something that is more USD focused, we will kind of get it back on the screen. Frank, I mean, that's the thing is it's really binary. As you mentioned, don't overcomplicate it. If this thing breaks lows, again, stop out, take the profit, move on. And if this level holds, which is, again, I think is very possible, we're sitting at support. If this level holds, we could very well clear the highs. Just depends what perhaps is said here in the next 20 minutes, 30 minutes as we get here. I do want to say also, guys, while we're all here, Frank and I, we've got 1,000 people in the audience with us. Just so that you do not lose track of us, we do this stuff on a regular basis. We've been trading together for a long time. We've shared ideas and shared charts with the community for a very long time. If you guys would like to get those updates, the Telegram channel is totally free to join. We've got a link to the Telegram being dropped here in the chat. That is totally free to join. If you would like to join, here it is. You can get ideas from us each and every day. And just to show what that looks like, guys, we put polls out there. We put out, it's a little bit of just Frank and I readable content that you guys can watch on a regular basis. Sorry, my computer's being slow. So yeah, so we've got like 33,000 of you guys in there. If you would like to join us inside of the Telegram, it is totally free to join. The link is in the chat right now. So we'd love to have you in there. We do polls and stuff, and let's do a fun one just for no reason while we wait on perhaps some updates. I'm just going to do a poll here. Are you watching us live on YouTube? Yes? No?
No.
It's the third one. Frank's not watching us. I don't know how this is possible. Okay, we'll just do that. Okay. Vote if you guys are in the Telegram. We do these votes on a regular basis. They're kind of fun. Anyways, still 1,050 of you guys here hanging out with us. If you're enjoying the stream, smash that like button, if you will. S&P still trying to stay at support. As we mentioned, game plan is very binary. If it breaks support, trailing for profit. I think another market everybody's wondering, if you guys could spam the comment section, what do you guys want to see? Frank and I will keep covering charts. Gold, not quite finding support just yet. Here's the 1 hour chart. 38.2 so far, looks to be breaking. If it runs lower, I think last line of defense for the bulls is 61.8. Price pulls back here. You've got some support looking left. If that level doesn't hold,
Dollars
back through the lows. Yeah, dollars pushing.
Dollars trying to test that trend line. If we see it go up and then sharply pull back, we know that it's a true trend here. But yeah, that I'm not really sure why it's going this way right now, but we'll see.
Yeah, we can see this level of resistance that we were watching so closely seems to be breaking. But again, with these candle closes, remember guys, these news moments can be very, very volatile, and this thing could close back with a wick on top, or it could go much further. So we'll have to watch to see. There's only 20 minutes left on this candle, and this is a 4 hour chart. So could be kind of interesting. Frank, can you show your screen here? You've got that, the kind of megaphone pattern going on here with the dollar. What does this tell you? I mean, at what point do you say dollar breakout is real? And I guess, like, what do you justify if you're a dollar bear? Where do you call in, or where do you throw in the towel?
Yeah, so I mean, if we break above this area right here, that's pretty significant. That's something price has been holding under for the past several days. So if we break above, I would say 106, 106.1, then it's starting to look more dollar bullish on a technical side of things. But I don't really have a bullish opinion on it yet. I think over time, like, we're going to see that this is just sort of bigger news than it should be, and that whatever we see today might not be the same tomorrow. Because I remember we used to watch NFP, FOMC, and the market react completely opposite of what you'd think, and then the next day it was back to normal again. Everything was sunshine and rainbows in the market. So I don't really know. I think this is just it's a temporary jump or fall, and depending on what asset you're looking at, I'm not too convinced of dollar strength right now.
Yep, that's fair. And in terms of if this thing pops higher, as Frank mentioned, it's not as like binary of a catalyst as perhaps like CPI or NFP. If you get like just a rock solid, number come out, that's different. But just like kind of political or economic speak like this, it certainly can cause some real big shakeups in the market, but it's not necessarily real moves. You can get a lot of really weird false moves going on in the markets. There was a yield auction, and the 10-year went way up. Oh, that's interesting. Have we looked at the 10-year, Frank?
I've seen the 2-year. The 2-year was pretty high on the day.
Interesting. Here's the 10-year. Popped a little bit here recently. Yeah, look at that 10-year, Frank. That's moving quite a bit. US 20-year as well. Yeah, some longer duration stuff doing quite well today. US 2-year. That's doing. Oh yeah, look at the 2-year. Actually, it's Frank. It's longer duration that's outpacing today, which would be a little bit more of a signal of I don't know. It's a different signal than just short-term bonds. You know, if longer bonds are becoming or selling off, that's a little bit more risk off. TLT. Let's see what TLT is doing.
Probably dropping, I would presume.
So that's what it seems like that's the driver here today is the yield auction. Marcel in the chat, thank you very much for sharing that. I didn't even look at this stuff yet. See S&P 500. Is that moving still? Still at support? Looking a little sketchy here. We might get stopped out. Might get trailed out. Very close. Not quite there. Yeah, look at that. I mean, that's a big red candle. If I do end up trailing out, again, it will be giving back some of the gains, but it's going to have to be, if we break through this level and stay going lower, that's going to be trailing out for me. And we will call it good on that trade. We're still floating about, $8,000, which is a crazy good move. Of course, as I mentioned earlier, that is off of a losing streak before this. So context is key there. But Frank, I mean, let's say indices wise, I want to talk game plan here. Let's say we get a flush lower and we're out. S&P 500, NASDAQ, right. Dow, what are you looking at? And I guess how do you trade it if we do get trailed out?
Just support and resistance. Similar to the dollar, where you have this trend line going upwards at a steep angle for the dollar. This trend line is going steeply downwards on the S&P, and price hasn't really tested that level yet. But under this level, if we break and close, this is 43, 45. If we go underneath that, I would say the next level to look for, at least for me, is around 43.17, and then zoom out even further. You have these this sort of area of traffic, I would say, around 42.50. But overall, we're in a pretty strong uptrend, and compared to all the gains we saw last week, this is like a minor blip in what we've been seeing. So, it looks catastrophic on the lower time frames, but this could just be another pullback in an otherwise strong uptrend.
Yeah, I mean, I tend to agree. Yes, you could make the point here. Clearly, you've got some resistance that we're sitting at, but there is the possibility that you just kind of get a nod to resistance here before price breaks higher. It's a little bit tough to kind of just be outright bearish here. I think if you're looking at the S&P 500, on the daily chart here, the downward trend was kind of beaten up here. Yes, we've got some horizontal resistance, but the diagonal kind of downward trend that we were seeing looks to be, broken out of. We're getting obviously some selling here today. And if I do get stopped out, I may look for a better opportunity to rejoin the trade, but I'm still bullish S&P and NASDAQ. In fact, if I rejoin, I liked what Jason was saying earlier. We saw smart money getting long NASDAQ on the COT data. Of course, we have on Friday, which tomorrow we have latest data out of the COT. So we will be covering that on the show. 1.44% bullish change. I mean, institutional money, they bought NASDAQ at the beginning of this week. We saw that. So NASDAQ pulling back very well could kind of just be, we've broken this channel, going back to retest. It's had a really good run, possibly due for a little bit of a push off of this retest. So NASDAQ, it might be my pick to rejoin if I can get it. Despite the really strong price move, I think we're probably due for a deeper pullback. And if it happens, that may be my pick this time around, but we'll have to see. EdgeFinder is giving it a nice like +8 score. So we're getting a really
Yeah.
bullish reading from NASDAQ, or +7. So what do you think? If you rejoin the trade, Frank, would you go NAS or would you stick with S&P?
That is tough. I don't know, because say you're wrong on the S&P or NAS, you're kind of more wrong if the trade goes against you if you're trading NAS. It just moves harder, and the S&P, I feel like is more balanced, more broad. It's like the overall stock market. NASDAQ is strictly, tech stocks. So
Right.
I think I would still just keep looking and keeping my eye on the S&P. It's not a huge turn of events, although today's candle does look pretty bearish. So it could be time for slight pullback here, but I'm overall just not I'm not looking to short it by any means.
Sure.
So S&P for
I'm
sure.
kind of with you. Again, I mean, overall, it's been, if I do get stopped out of this trade, it's still been a wonderful trade. Same with you, Frank. I mean, we caught a really nice move. Obviously, I would love it to keep going and to survive, but at the end of the day, a win is a win. And if it means just a smaller win than what it was up here, you can play the hindsight 2020 game all day long. Oh, I should have closed up here. It was at resistance. Well, you also could have said that here and here and here. And right, you can always say that kind of in hindsight. At the end of the day, we've got a nice trend overall to the upside. As you mentioned, maybe a little bit of a grim candle here today, but that doesn't mean we can't rejoin the trade. We've been very, very right. Made some good money on this one. And if we get stopped out, we get stopped out. But we're still sitting at support. So we've got to give it at least a chance. And so we're still letting the trade play. If it breaks, again, it breaks and we're out for a profit. So it's a win-win scenario here today with this current situation with the S&P.
And I'm wondering if what they're talking about is really affecting it. Are they talking about Israel still, the war in the Middle East?
It seems like it from what I could see. If Chandler, you want to just throw it on the screen for a second so we can take a look at that?
Scenario, again, some of our research has shown that we would have a large number of weak banks that represent about 1/3 of global assets, mostly located in advanced economies and in China. That would be a very difficult place to be in, which is why it's important to prepare in advance. This is the time for strong supervision, robust stress tests, and it's also important for banks to be able to augment their capital buffers at a time when they're making currently very high profits. Banks should also be prepared to quickly access central bank facilities if needed so that we don't have
I'll be right back too. My laptop's about to die.
And much more efforts
Give me
need
a
to be
second.
made to address the risk.
Okay, so nothing super impactful here. I do want to ask a favor from Chandler and James. We still got 850 people in here. We still got a great stream. If James wants to do maybe some COT data overview with us for a few minutes, give me a few minutes of break here. No rush, James, but if you want to just take over for a second, that way, if we do get some discussion, we can continue to monitor and Frank and I can come back to react to that. But we could maybe just do it that way. James, if you'd like to just come take over my chair for a few minutes, you'd be my savior. I'd really appreciate it. We've been going for almost 3 hours now, which is a long time. So, yeah, look at this. So S&P still sitting at support. Trying to decide here. Trying to decide. Frank, I'm asking James to give us a quick break here on the COT side. He's gonna take a look at some COT data. James, if you'd like to, like I said, you can take my chair in here if you'd like, if that's easier for you. Okay. Yeah, James is going to come do some COT breakdown with you guys. just give you a quick overview on that, give Frank and I just a few minutes of a break, and we'll come back if any discussion comes back. Don't go anywhere. We're going to go through some smart money data, take a look at what institutions are buying and selling currently, and we'll give you guys that update. James is going to take over. Actually, Chandler, if you want to just run a quick break, we'll come right back to James, who will be taking my spot in just a second. Check it out. Frank, are you really trading right now? We are literally traveling through space.
Yeah, I mean, thanks to 8cap, I can trade at any time and anywhere, even in space. And I get a free edge finder with it too.
That's pretty cool, but honestly, there are so many other brokers that I think are better.
That's it.
I'm ejecting you.
All right, Frank, let me back in. Come on. I'll sign up for 8cap, I promise.
Don't get lost in space. Trade with 8cap. If you'd like more information about how you can get a free edge finder, click the link that's in the chat or description to speak with one of our representatives and sign up with 8cap. There's some great free perks available. Check it out down below.
Frank! Guys, this is kind of surreal right now. I've made it. I've made it in my YouTube career. No, I'm just kidding. All right, let's take a look at the COT data really quickly. If you're unfamiliar with what COT data is, it's the commitment of traders data, and it's a big report that comes out once a week where like hedge fund guys, big bank guys, people who are trading with lots and lots of money professionally, they release a list of how many long contracts they have open, how many short contracts. And it's very detailed and complicated, but the Edge Finder makes it very, very simple to understand so that even someone like myself can understand. So let's go over this really quickly while we're giving Nick a little bit of a break. He is going to be back. We are still watching the stream. It's just right now they're doing a whole lot of presentations and we're more interested in the Q&A that's going to come afterwards. So don't go anywhere. We do have the Q&A with Jerome Powell coming up at some point, but we're keeping our eye out on that. So here we go with the COT data. So right now, this is actually surprising to me. So I have not looked at the smart money tracker yet this week, and I was not expecting to see the dollar so favored on the long side right now. I believe last week it was kind of somewhere in the middle, like around the 50-50 area, but it seems like, in fact, I guess I can look at this. Where is our friend, the dollar? USD. I don't see it on here. It must have not. Oh, there it is. Really? The net change was negative, and yet it's, interesting. Maybe I'm missing something. Or maybe I didn't look at it last week. But US dollar currently is the most bullish or favored on the long side from institutional traders at 76%. Followed by stuff like oil, gold, silver, and then our next currency is actually the euro at 62.7% long. On the other hand, we have a few currencies who are heavily shorted. The yen, no surprise there. The yen has been pretty weak for honestly like the better part of a year. If you were watching earlier, I gave a super short news presentation about a huge stimulus that the Bank of Japan is actually about to give in order to boost some of that yen strength. 88 billion US dollars is what it equals to that stimulus package coming in from the Bank of Japan. But Japanese yen very heavily favored on the short side at 79%, followed by the Australian dollar at 77%, Canadian dollar 75%, and lastly the Swiss franc about 73%. But let's take a look at this. This is really what the cool part about the smart money tracker is this chart here. And I know it's a lot of numbers before, and if you've never seen it, don't worry. It's actually really easy to understand. So right up here, these are all of our categories, if you will. So we can see our long contracts. This is the total number of long contracts, the changes from our last data report. Short contracts, same thing, changes right here. But the way that we have this laid out is we have our net change. This is what we're really looking at. So we have our largest net change up here at the top and our most negative net change down here at the bottom. And what this is it's the difference between short contracts and long contracts, the change from the last data report. So platinum is actually our most bullish net change asset from last week's COT data report to this week's COT data report. And let me explain. Both long contracts and short contracts were taken away. So there were more long contracts taken away or closed than there were added. Negative 1,757 long contracts were removed from the last data report. But 13,063 short contracts were closed or taken off the report since the last data release. The difference between those shows a 7% 7% change in favor of the long contracts. Another good example here, Australian dollar. What do we see here? We see 4,787 long contracts opened since our last data report, whereas 3,184 short contracts were closed since our last data report. Again, what that means is we can see that institutional traders, those big smart money hedge fund guys, they are currently opening long contracts on the Australian dollar and they are closing their short contracts on the Australian dollar. That nets in a 3.17% change in favor of the long contracts. So what that kind of tells you is it gives you a heads up to what smart money traders are doing. Even though the Australian dollar right now is favored still on the short side, we see that institutional traders are starting to go long. You know, it's favored on the short side at 77%, but why are institutional traders closing their short contracts and opening long contracts? Something to pay attention to. So that's what I think is really cool with the smart money tracker. And we can take a look at a few more examples of that. Like, for example, oil down here has had an interesting move, negative 4.6%. So if we actually look at the short contracts, we can see 25,759 short contracts opened from institutional traders, whereas 12,748 long contracts were closed by institutional traders. So it can really give you kind of a look ahead into the thought process of these like really smart, really intelligent guys that have access to, you know, all sorts of tools, all sorts of knowledge, and you know, they trade professionally for a living for some of the biggest companies in the world. And so, you know, being able to see this kind of stuff and interpret it this way is actually super, super useful. So I know not to get too sales pitchy here, but the EDGEFINDER really is a very cool and very powerful tool, and it's 45% off right now. So if you want access to something like this, the smart money tracker, where you can see the net change difference between the COT data. Trust me, if you try to read the COT data report by yourself, I have seen it one time and it blew my freaking mind because I had no idea what I was looking at. I was trying to find, I can't remember what asset. I was just trying to figure out if they were like long or something. And it was like reading hieroglyphics. It was like impossible to read. But the smart money tracker, not impossible to read. It's actually pretty simple to read. Once you know what you're looking at, it's actually very, very simple to read. What do you think? Should I take some? Oh, we got Frank. Frank, are you what are you doing, Frank? You want to come on stream, or are you still taking a break? Give me a thumbs up, thumbs down. Frank gave a thumbs up, so let's pull Frank into here for a little bit. Frank gave thumbs down, so I'm gonna remove Frank now. Frank gave me a thumbs up initially, but then gave me the thumbs down. All right, well, I've kind of gone over the smart money tracker. Nick has been streaming for like about 3 hours at this point, so he deserves a little bit of a break. We have 600 people in here though.
Yeah, I was kidding.
Oh,
I was kidding with the thumbs down.
You want to look at some charts, or do you want to keep taking your break? I don't care. Whichever one you want to do.
You can look at charts, sure.
All right, Frank is gonna. Guys, we have 600. The host. Oh, Chandler, did you mute me? We have 600 people in here, and they have not started their Q&A session yet. So we can take a look at a couple charts. Let's see if you have some charts that you want us to take a look at. Let us know, and then we'll pull Frank in here in a second, and we'll we'll look at some charts. I get to look at charts in the boss's chair. Ramsey says, tell us about USD CHF. Tim says, let's see the analysis, James. We're gonna see. Frank, I'll start with the USD CHF, and then you can tell me how I did. So let's see here, USD CHF. The first thing I got to do is I got to back this thing way out. I got to see the whole picture here. So right now we're looking at a 4-hour chart. Switch over to the daily chart. Okay, so the overall trend for most of the year seems to have been fairly bullish. Came down a little bit last month, but has popped back up a bit here. So I would say overall, USD CHF is definitely in a bullish. Why can't I? There we go. I'd say USD CHF is definitely overall on a bullish trend right now. I'm going to switch it over to the 1 hour and let's see if we can find an entry here. So zoom this out just a little bit. So testing areas of support here as well, maybe. Our next area of resistance looks like it's about right here. So overall looks like a bullish trend. Certainly this week, it's definitely been moving higher. Based off of what Powell is saying, it's been moving higher as well. I probably wouldn't touch it until it crosses this right here. This area right here, I would wait until we kind of close up into this area here because I want to see it not just bounce off of this zone right here. So that's exactly what it did while Powell was talking. Was price came up, tested this zone, and came back down. If price can get comfortably, like break comfortably past here, especially past this range here, then I might look to be bullish. Hold on, Hamdi. You have got to chill out in the chat. Then I might look for a long play. If not, I would not touch this until I know what it's going to do past the 90399 range, or a little bit higher than that. We'll call it 90400. That's when I would look into we're breaking down USD CHF here as a request from the chat. So I was looking, I see an overall bullish trend here, looking at the hourly chart. Price definitely came back here, but overall bullish this week at least. But I'm looking at this level of resistance right here, where I kind of marked up this area. Price came up and tested that when JP was talking. And I was saying I wouldn't look for a play until we break comfortably and close comfortably past this level of resistance right here. Until then, it could just keep bouncing up and then eventually come back down, which if it were to retest here and it just couldn't break through and started to move lower, then potentially look for a short setup there. But yeah, it's overall bullish in my opinion, but I wouldn't take a long until it closes past this level of resistance here. That's my thoughts on USD CHF. I'm going to give it back to the guy that really knows what he's talking about, though. Nick is back, everybody.
Thanks, James. Can we get some thank you, James, in the audience here? James, thank you for the break. As always, guys, we try and stay alive as long as possible for these events. It doesn't look like we have a panel anytime soon, and we've been live for just almost 3 hours. So I think we might be calling it here. We're running on fumes, as Chandler puts it. I hope you guys enjoyed what we had here today. In terms of coverage, let me say this. If something of real substance comes after the time that we go off air, you will hear about it in our Telegram channel. So Chandler, if you don't mind dropping the link to our Telegram, we will continue listening to the situation. We're just running out of stream fuel, I guess. If you would like to keep up with our thoughts, anything that we're up to in the markets, please join us inside of our free Telegram channel. The link is in the description. I'm in the chat right here. But this is going to be on like my 5th hour of streaming today, so it's a little bit too much for us to continue. I'm out of breath just childlike talking. It's crazy. Anyways, join our Telegram. It's totally free to do. And remember, guys, for those of you who are regular stream viewers, we are doing our 45% off sale. If you want access to the COT data that James was just going over and we use on every stream, or if you'd like access to the signals that Frank and I are sharing, or joining Ivan's coaching webinars, we got it all going on. And currently it is all 45% off if you chat with us right now as we end the stream. Take advantage of our massive discounts right now. You get access to anything you want. We have lifetime prices going up right now. So that means you don't pay recurring fees. So if you're somebody who's like, I don't want to pay a month-to-month subscription, one-time fees. Get access to the software or to our Discord. No recurring charges to your account. It is a one-time price to get our software. It is a one-time price to join our Discord. And right now, you're getting the best price of the year if you message us. So I want to thank everybody who came on the show. I know a lot of people, go into these shows in terms of, Chandler and James producing it, Frank coming on and doing, an hour segment with me. And I know that's a lot of work for everyone here. And I want to thank you guys as an audience. We really appreciate you being here and hanging out with us. We had like 1,300 viewers, which is just a crazy stream. You guys are awesome. We really appreciate the audience. And it seems like the streams have been kind of blowing up recently. We love doing them. So with that said, we're going to shut down. Remember, take advantage, 45% off Black Friday. Send us a direct message. And with that said, guys, have a great rest of your day. Keep up with us in the Telegram. We'll let you know if anything changes in terms of analysis, etc. See you guys next time.
Thanks again for flying with us on the A1 Trader. Our goal at A1 Trading is to give you the latest in market news through our daily videos and articles. Take advantage of our huge Black Friday sale, 45% off, happening all month on our best products we have to offer. A1 Trader, prepare for the return home.